There are very less days for the examination. Many students have already started counting the hours for the final countdown of examination. I know how much stressful you are and how much tension and how many thoughts are running in your heads. I know. And I am here to tell you that these are very much common. So hold your breath back, be calm, be relaxed, and just focus on what I'm trying to tell you. You all already have the clarity of what to revise, how to revise. Just put it in a paper and start doing it. That is what you're going to do. Now, if you don't have the clarity of what to do and how to do it, then I am going to tell you now. For this subject of cost and management audit, what should be done? How we are going to revise it? If you don't have conceptual clarity, then rely on part 1, part 2 marathon, which is already available in the YouTube channel. And if you want to know how the questions will be tested in the examination from the important concepts and how you have to present it in the examination as an answer, if you want to know about that, then focus on the Super 50 questions, which is already available in the YouTube as a video. Superthon classes are available in which we have conducted Super 50 revision booster session where I have discussed descriptive questions of what questions are important and how it will be presented in the examination. That's it. You already have the conceptual clarity. You already know what kind of descriptive questions will be tested and how you have to present it in the examination. Now, in this video, I'm here to give you the clarity about the practical questions part also. So yes, we also have the clarity of concepts, descriptive questions, and here we also have a video of practical questions. So you can rely on all these sources and complete your preparation with 100% efficiency. That's for sure. So do not think twice. Just rely on this. Trust the videos. If trust is there, then you can do anything. Anything is possible. So trust the videos. Don't rely on many sources. Rely on one source and do it effectively. So that's what we believe and you should also believe it. So yes, you already know what this video is for. This is a video of SMART 25 practical questions discussion for cost and management audit. And many of you already know me. This is CMA Parvathi, your mentor for cost and management audit. Now, without skipping much time, I'm going to give you the clarity about the videos. I've already given you the clarity about the videos. So rely on those videos. And in this entire video, or if you have any doubts from the previous videos, you can join the Telegram channel, which is exclusively for cost and management audit. So entirely in this video, if you have any doubts in any of the question or in any of the concept, so you can give a direct message in that particular group at any point of time as early as possible. The reply will be given and the clarification will be given to you. So yes, join the Telegram channel and the links for everything, the playlist, videos, Telegram channel, everything will be given in the description box for your easy reference. So yes, we will not take much time. We are going to directly go into the video of practical questions. So yes, this will be a discussion of SMART 25 practical short questions. And this, if you want this PDF is also available in the BCCA application as free resources. So this is a combination of Super 50 Theory Booster and SMART 25 practical short questions PDF. This is also available as a free resources. So you can go there, download it and get benefit of it. So yes, from this PDF only, I'm going to give you the clarity of SMART 25 practical short questions. The main important doubt which I have to clarify, ma'am, are these SMART 25 questions enough for the examination? Yes, these are enough for the examination, but you have to remember that you should not only focus on the question and the solution, but you have to focus on the adjustments and its implication and the concept behind it. If you have all these three, if you're focusing on these three things, then yes, these SMART 25 questions are more than enough for your examination. And the bonus part of this video is that I'm not only going to take the questions from this PDF, which is relevant to my concept book and Pinnacle book, but we are also going to cover the workbook, Cost and Management Audit workbook, which is released by ICMAI. So in this also we have some questions which I think should be discussed. So yes, those questions also will be discussed in this particular class. So what are we waiting for? I have already given you the introduction of this particular video. So we are going to directly jump into the questions. So yes, SMART 25 practical questions. So if we see the syllabus of the cost and management audit, in what topics the practical questions will be tested? The practical questions will only be tested from companies cost records and audit rules 2014, overview of cost accounting standards and GASAP, which is generally accepted cost accounting principles, and management reporting issues and analysis. So only from these three concepts or topics, the practical questions will be tested in the examination. Now, we are going to start with Companies Cost Records and Audit Rules 2014. In this, what questions will be tested? One is value addition, the other is financial position and ratio analysis, and the third is profit reconciliation. Only from these three topics, the questions will be tested from the concept of Companies Cost Records and Audit Rules 2014. So yes, we are going to start with the value addition topic, which is our question number 1. Now, question number 1. This has been tested in June 2023 attempt as well as in December 2018 attempt. So we'll see the question and we will know how we have to present it in the examination and how we will solve this particular question. The following figures are obtained from the cost accounting records of Vanilla Limited, and these are the information which they have specified. And what do we have to do? You are required to calculate the following parameters as stipulated part D, para 3 of annexure to the cost audit report under company's cost records and audit rules 2014 for the year ended March 31st, 2023 and March 31st, 2022. Now, what are we going to calculate? We are going to calculate, first is value addition, then earnings available for distribution and distribution of earnings to different claimants. This is what we have to do as a solution. Now, many of you already know what is our format for value addition. So this is the format for value addition. Now, what is called as value addition? The enhancement of value which is having to the business through a process of transforming the raw materials into finished goods. This part, whatever it happening, it is called as value addition. So if we see here, increase in value of a business by transforming raw materials into finished goods. This is called as value addition. So we are not going to go in detail about all that, but we are going to see the format for value addition. Now, what is the format? First, we will take revenue from operations. From that, whatever taxes or duties are there, those will be deducted. And we will get the net revenue from operations. For this net revenue from operations, we are going to add the export incentives, add or less adjustments in stock. Then we will get the total of A. From this total of A, we are going to less cost of bought out inputs. So whatever cost is incurred, all those costs will be reduced from this particular total of A. Then we will take the total of cost of bought out inputs. This will be our total of B. Now, whatever A and B, which is we are calculated, if we eliminate the B, which is a total of cost of bought out inputs, from this, we will get the value addition. That is first. And after value addition is calculated, for value addition amount, if we are adding the income from other sources and any other exceptional and extraordinary income, then whatever the amount we get is earnings available for distribution. and this earnings will be distributed to different claimants such as employees as salaries, wages, retirement benefits, to shareholders as dividend, company as retained funds, government as taxes, any other expenses are there, all those will be distributed. And after that, this will be called as distribution of earnings to different claimants. Simple. Already we have a structured format. In the same format only we are going to do the practical question. So, first, what did they ask us? They have asked us to do the value addition. Now, main importantly, you already will know, have the idea about the format. You already know that everything is already given in the question. You just have to take up this and split it into 3 different parts of value addition, earnings available for distribution, and distribution of earnings to different claimants, and place it in those tables. But the presentation is very, very important. How you are going to present it in the examination will fetch you the marks, will help you to increase the marks. Even though your answer is right, if your presentation is bad, you will lose the marks there. So, for this question, how you are going to start your answer? In the question, if they have mentioned about any company name, that is how you are going to start the question or the solution. So yes, take up the notes and write along with me. So our first question we are going to start. Now, what is the first? First we will write Vanilla Limited. First we will write Vanilla Limited, and after that come down. What they have told us, we have to do the calculation according to Part D, Para 3 of the annexure to the cost audit report under Companies Cost Records and Audit Rules 2014. Only by following this, we have to do the solution. So, we have to give that clarity that as per Companies Cost Records and Audit Rules 2014, as per Companies Cost Records and Audit Rules 2014, and parameters of Part D, Para 3, or as per annexure to cost audit report, as per Companies Cost Records and Audit Rules 2014, Part D, Para 3 of annexure to cost audit report. I hope it is clear. This will be our heading. Now, we are going to start our question, as they have given us in 3 parts. First will be our value addition, then will be our earnings available for distribution, and distribution of earnings to different claimants. This is how we are going to present it in the examination also. So first you will write the first point, and then you will write statement showing computation of value addition. If the year is mentioned in the question, then year is very important. For the year ended March 31st, 2023 and March 31st, 2022. For the year ended March 31st, 2023 and March 31st, 2022. This will be your heading. And then you will move to the format. First will be your particulars. Then here will be your amount. Amount will be in rupees. Rupee symbol is very, very important. If they have mentioned anything like in lakhs, then you have to write that. Amount rupees in lakhs. And we are going to split the entire table into 2 parts. One is for 2023 year and next is for 2022 year. I hope it is clear. So this is how your table will look like. And here you are going to write the particulars, and here you will write the amounts for 2023 and 2022. and then you will do the total. After completion of that, you will go for 2. 2 will be your statement showing computation of earnings available for distribution. And you will follow the same format, particulars, amount, rupees in lakhs, 2023 and 2022. You will take the value addition, you will add income from other sources, then you will get earnings available for distribution. You will do that. Then you will take 3. In this 3, you will write statement showing distribution of earnings to different claimants. This will be your headings. Title for the table is very, very important. The introduction for the answer is also very, very important. So this will be our presentation. This presentation will only help you to increase the marks. I hope it is clear. So we have the clarity of presentation now. Now we will see the question. Now, how the value addition will be calculated? How we will get the value addition? First, we'll take net revenue from operations. If any taxes are there, we'll reduce it. Then we'll get net revenue from operations. We'll add export incentives, add or less adjustments of stock. Then less of cost out, bought out inputs. Then we'll get the value addition. So that only we are going to do it. First, net sales is given. Net sales are given. So net sales will be taken into value addition. Other income, where we will take the other income. Earnings available for distribution. Export incentives. For net sales, the export incentives will be added. So we'll add export incentives. Increase in value of stock of finished goods. If finished goods is increased, then profit will increase. So we have to add this to net sales. Add increase in value of stock of finished goods. Then we will get the total of A. From the total of A, we are going to reduce less cost of bought out inputs. In that cost of bought out inputs, what all we are going to take? Raw materials consumed, less. Direct wages, salaries, bonus and gratuity. This is distribution of earnings to different claimants. Distribution will be done to employees, shareholders, government, company has retained funds. If any interest is taken, interest will be paid. All these are distribution of earnings. So this is distribution of earnings. Power and fuel, we'll try to reduce it. Stores and spares, less. Other manufacturing overheads, less. This is also cost of bought out inputs. In administrative overheads, audit fees. Now, main important part is, students will think that audit fees is also a salary which is being paid. So this will be taken into distribution of earnings to different claimants. But here there is a twist. No, audit fees is not to be taken as distribution, but this will be considered in value addition. Now, why audit fees will be considered in value addition? Because this is not the audit fees which we are paying after completion of finalizing of accounts. No. This is the fees which is paying to the auditor for finalizing our finished goods. So our finished goods are not yet finalized. It is still in the process of transforming raw materials into finished goods. To clear up this finished goods, to check the quality, quantity and all, we are paying audit fees. So because of which audit fees is given under administrative overhead. Not given as a separate audit fees. This is given under administrative overheads. So this will be taken into value addition. So here we'll reduce it. Salaries and commission to directs, it will be taken into distribution of earnings to different claimants. Other overheads. So this other overheads are for administrative overheads. This will be reduced. Next, selling and distribution overheads. Salaries and wages will be taken into distribution. Packing and forwarding will be less. Other overheads of selling and distribution overheads, we will reduce it. Depreciation will not take depreciation into value addition, but this will be taken into distribution. Interest charges. In interest charges on working capital loans from banks. Now, what is the purpose of working capital loans? These are taken for day-to-day purposes. Yes or no? So, if we are taking a loan for day-to-day activities, now what is a day-to-day activity of an entity or industry? Nothing but production, which means this amount is put in transforming raw materials into finished goods. Yes, which means this is also a part of cost of bought out inputs, which means this is also a part of value addition. So yes, we will consider this also as a cost. So this working capital loans interest will also be reduced from the value addition in the calculation of value addition. Then on fixed bank loans, distribution, debentures, loans, tax paid, distribution, dividend paid, distribution, dividend distribution tax. All this will be get into distribution of earnings to different claimants. I hope it is clear. Now, this we are going to put in the format which we have seen. In this format, you are going to put this. We will see the solution. You'll get the much clarity. Now, first, you will take the format. First, what is given? Net sales. Net sales are 7,120 and 5,700. First, you will take the net sales. For this net sales, you will do add export incentives. Add export incentives 80 and 60. Then add increase in value of stock of finished goods. Add or less adjustments in finished goods, add. Then you will take total of A. Total of A. From this, less cost of bought out inputs. From this, less of cost of bought out inputs. Raw materials consumed reduce. You will reduce raw materials consumed. And then power and fuel 360 to 88. Power and fuel 360 to 88. And then after that, stores and spares 240 to 10. 240 to 10. You will reduce it. After that, what is that? Other manufacturing overhead 645 and 555. 645 and 555. Even though in the workbook it is given as this, which means it is given in this way. Everything is given under other overheads. I request you to write in a separate manner, which means bifurcate and give it. Just a minute. Yes. So you'll take other manufacturing overheads as 645 and 555. Write it separately only. And then after that, you will take audit fees 54 and 45. Audit fees. After that, we have other overheads of administrative overheads 390 and 330. 390 and 330. And then we'll have packing and forwarding and other overheads 30, 24, 375, 300. 30, 24, 375 and 300. I hope you're getting the clarity. Next, interest on working capital loans 90 and 75. 90 and 75. Bifurcate everything and write it under the different heads of selling and distribution, administrative, packing and other overheads. Write it separately so that the examiner will not get confused, will not sit and check in a so calm and composed way. So write it in a bifurcated manner so it will give you the enough benefit. If you do the total, you'll get the total of cost of bought out inputs. So total of A and total of B. A minus B will be our value addition. I hope it is clear. This will be our first table. And after that, we have other income. For this value added amount, if we add other income, extraordinary income is not given to us. We will get earnings available for distribution. So what is other income given? 450 and 300. You'll take 450 and 300. You'll add it to the value addition amount. You will get the earnings available for distribution. This will be our second table. Now, moving on to the third table. Distribution of earnings to different claimants. So, first distribution will be done to the employees as salaries and wages. So, how many salaries and wages are there? 1, here 2 and salaries and commission to directors. 3 are there. So, here in this question, how it will be given is direct wages and salaries and wages. Both 660 and 54 will be added and it will be given as 714. And Whatever the commission paid to the directors is given as a separately. Now why it is considered like that? Because here commission is there, here only salaries, wages, bonus, gratuity is given. So it is done like that, bifurcated and given. You can write it in your own way. If you want to combine everything and give it as a single employees salaries, payments, commission, you can write it and write the total amount also. So employees will consider all this three. Whatever we have, direct wages and salaries considered, salaries and wages to commission directors, commission to directors, and salaries and wages. Done. Now after that, next is dividends. Shareholders as dividend. First will be given to the employees. Next will be given to the shareholders. Shareholders as dividend. 630 and 345. 630 and 345. And then after that, whatever company as retained funds. Now, company as retained funds is nothing but the balancing figure which you get. This is the amount. From this amount, inclusive of depreciation, you will take the company as retained funds. So, inclusive of depreciation and whatever the amount, balance amount is there, that will be the balancing figure for company as retained funds. But you can't write balancing figure in the examination. So, for that, you have to write it a working note. So first you will take earnings available for distribution. From that, whatever the employee's cost is there, you will eliminate it. Director salaries and commission, eliminate. Dividend paid, taxes paid, whatever interest paid. Everything you will eliminate it. Then you will get the 676. This is retained earnings. For this retained earnings, you have to add the depreciation amount which is given. So, you will write here distribution of earnings as company as retained funds inclusive of depreciation. You will write the amount. I hope it is clear. After company as retained funds, you will take it as government as taxes. Now, what all taxes they have given? Tax paid inclusive of provisions and dividend distribution tax. You will take all that both. And after that, the rest is interest. Interest is there on fixed loans and on debentures. Interest, debentures, fixed loans. Total distribution of earnings. Now, whatever earnings available for distribution, table 2 total and table 3 total should be equal. Simple. So, this is how your presentation should be there. Neat, clear and simple. Everything is already given in the question. You already know the format. Just take everything and put it in a same format. Entire question is done. 7 marks is in your pocket. I hope it is clear to you. So question 1 we have completed. I hope I have given you the clarity for value addition. Now we are going to start with our question number 2. This is from financial position and ratio analysis. Now what is question number 2? This has been tested in December 2019 attempt. The following parameters are extracted from the cost accounting records of Alco Box Limited, multi-products manufacturing company for 2 years. Okay. Year ended, the information is given to us. Okay. Now, what are they asking us? You are required to compute the following ratios as stipulated in Part D, Para 4, to the annexure to the cost audit report under company's cost records and audit rules 2014 for the year ended March 31st, 2019 and March 31st, 2018. They are asking us about the profit before tax to value added. So, they are asking us the percentage. Profit before tax to value added to net sales, and profit before tax to net revenue from operations. Now, what is net sales? Net sales is already given in the question. So, gross sales, GST will get the net sales. And net revenue from operations are also nothing but net sales. Here, what do we have to find out? As a statement, what do we have to calculate? First is profit before tax and next is value added. So, we need 2 statements. No, we need 3 statements. One statement or one table is for profit before tax calculation. The other table is for value addition calculation. And in the third table, you are going to do this percentage of profit before tax to value addition to net sales, and profit before tax to net revenue from operations. So, these are the 3 tables which we are going to write it as a solution for this particular question. Now, how we are going to present it? Same thing what we have done here, same thing you are going to write it again. Now, as question number 2, you're going to write it as per company's cost. I'm really sorry. First, you have to write the name of a company. Here they have mentioned as the name of a company to be Alcobox Limited. So first will be your Alcobox Limited. Then will be your introduction as per company's cost records and audit rules 2014. Audit rules 2014. And what is it? Part D, para 4. Part D, para 4 to the Part D, para 4 of annexure to the cost audit report. Of annexure to cost audit report. This will be a heading. So first, you will put as 1C. If in the question they have given us this 1, 2, 3. So if you are putting 1 as a profit before tax statement and 2 as value addition statement and 3 as this, then your entire answer will go wrong. Which means you're proving that profit before tax calculation is this. So don't do that. So what I prefer is either give A, B, C or else just leave it. Don't give anything. Put arrow mark and write it as a statement showing computation of profit before tax. And how your table going to be? Particulars and amount is here also given in lakhs, amount rupees in lakhs. You're going to write that down. After that, we have 2 years. One is 2019 and another is 2018. So we'll write 2019, 2018. So this is going to be a first statement. And then after that, statement showing, second statement will be statement showing computation of value addition. Value addition. Then you will write the same format. Then what will be a statement 3? Here you can put as a star mark as this is your actual answer. Statement showing ratios. Clear? So this will be a 3 table formats and this is how you are going to present it in the examination. I hope it is clear. Now, what is the question? We have to calculate the profit before tax. Now, how profit before tax will be calculated? They have given us gross sales inclusive of GST. First, we'll take gross sales. From that, we will eliminate the GST. Gross sales inclusive of GST, less GST, you'll get net sales. Net sales are nothing but net revenue from operations. No other income is given to us. Net revenue from operations. Now, from revenue, if we reduce the cost of sales, whatever the answer is that, the amount is that will be a profit before tax. So, we are going to calculate the cost of sales because we have already got the revenue. Now, what is cost of sales? Raw materials consumed. We'll take raw materials consumed. You will take direct wages and salaries, power and fuel, stores, spares and consumed, repairs and maintenance, depreciation charged to production cost centers because they have asked us profit before tax, not profit before depreciation, tax, interest. No, only profit before tax. So depreciation will also be considered. Now, coming to next, you'll put the heading of factory overheads. In factory overheads, salaries and wages, depreciation. Here comes the main part. Rates and taxes. Do we have to consider rates and taxes or not? Here the answer is rates and taxes will be considered when profit before tax is calculated. How, madam? Because this is rates and taxes under factory overheads and rates and taxes under administrative overheads. Which means when the transportation is happening, if you are paying any uh, taxes or rates like freight, octroi, transportation taxes, or any other detention, demurrage charges, all these taxes and rates which you are paying, which is categorized into factory overheads or administrative overheads, those will be calculated and taken into consideration when we are doing the calculation of profit before tax. This is not the tax which we are paying from the income or from the revenue. Okay, I hope it is clear to you. So, in factory overheads, we'll consider all salaries and wages, depreciation, rates and taxes are the overheads. And in administrative overheads also, you'll take it. Selling and distribution overheads, you'll take all, and you'll consider the interest. So, yes, direct wages and salaries, power and fuel, stores and spares. Depreciation charge to production cost centers. Factory overheads, inclusive of depreciation, administrative overheads, selling and distribution overheads. Either you can write it as total or you can bifurcate it and write it down. Then interest, and then bonus and gratuity. So everything is already given in the question, just you have to write it down. That's it. So what is total of A? Net revenue from operations. What is total of B? Cost of sales. From revenue, if you reduce cost, that will be a profit before tax. I hope it is clear. Everything is given in the question. You just have to know the format, present it in a neat and plain manner. That's it. Now, we are going for value addition. Now, in value addition, what we will first consider net sales. As gross sales minus GST, we have already done here. You need not do it again. You can directly take the net sales. They haven't given us any export incentives. So, no export incentives. They haven't given us any adjustments of stock. So, that is also not taken. Directly we'll go to less cost of bought out inputs. Less cost of bought out inputs. Raw materials consumed, direct wages and salaries will not be taken. Power and fuel will be taken. Stores and spares will be taken. Repairs and maintenance will be taken. Depreciation will not be taken. Repairs and maintenance will be taken. Depreciation will not be taken. Overheads. Here everything is combined. Factory overheads, administrative overheads, selling and distribution overheads. What is not considered? Salaries, wages not considered. Rates and taxes. This rates and taxes will not be considered even in the value addition also. Depreciation will not be considered. Other than that, whatever we have, salaries and wages will not be considered. Depreciation, rates and taxes. Other overheads. Here also other overheads. Here packing and forwarding, other overheads. Everything will be considered. So you'll take that and you will get the total of cost of bought out inputs. Now, what is value addition? Net sales minus cost of bought out inputs. You'll get the value addition. I hope it is clear. And third statement, you'll write it as statement showing ratios. In that, profit before tax to value added. Now, what is profit before tax? 1300. 1300 divided by 3830 into 100. If you do, you'll get the percentage. Similarly, value added to net sales. What is value added? 3830 divided by 24,430 into 100. You'll get the percentage. Then profit before tax to net revenue from operations. What is profit before tax? 1300. What is net revenue from operations? 24,430. You'll take that into 100, do the percentage, you will get the answer. I hope it is clear. Simple questions, not to be worried about. Everything is already given in the question, just you have to write it down. I hope question 2 of Super 50 questions is also clear. Now we are going to start with the next questions of profit reconciliation. So yes, profit reconciliation question. Now, if we come here, this is ICMAI workbook which is issued. And in this, we have a profit reconciliation question. So now we are going to see this particular question first. Following data are available for the company A. Prepare reconciliation statement. Okay. Simple question is given to us. Now, profit as per cost records is given and they are asking us to derive profit as per financial accounts. Okay. Now, if profit as per cost records is given, demurrage for raw material, previous year debit note included in the raw material cost, previous year settlement paid during the year and booked in the employee cost, Interest for delayed payment of PF booked in current year as employee cost and insurance claim received of previous year. These are the adjustments which are given. Now, first let us understand what does each an adjustment mean. Now, demurrage for raw material cost. Now, all these are nothing but the expenses or the incomes which are booked in the financial accounts. So, all these are the entries which are already made in the financial accounts. But these are not considered in the cost records. So, there is a difference in the cost records and financial records profit because of these adjustments. So, now demurrage for raw materials. So, there are demurrage charges which are paid for raw materials procurement, which means this is an expenditure. Yes or no? So, expenditure is already recorded in the financial accounts, which reduce the profit of financial accounts. But in cost records, the profit is higher. But here what is happening? We need financial accounts profit. If we see that this is financial records and this hand is financial records, this hand is cost records. So in financials, already expenses are recorded, which is demurrage for raw material cost, because of which the profit is here in financials. But in costing, demurrage for raw materials is not recorded, due to which cost records is here. We already have the profit of 100 crores of cost records. Now, what is profit of financial records? We doesn't know it. So, what we are going to do, whatever the expense which is already considered here, we are also considering it in cost records. So, we are reducing the demurrage charges so that we will be able to match both financial accounts and cost accounts. I hope it is clear. So, expenses not considered in the cost records, but considered in the financial accounts, that we are trying to reduce it. Demurrage for raw materials. Less expenses not considered in the cost accounts, but considered in the financial accounts. Demurrage charges. I hope this is clear to you. So, demurrages 2 crore rupees will be reduced. And then, previous year debit note included in raw material cost. Now, what is this debit note issued? Which means priorly we have paid an excess amount to the raw material purchase. Now, what in the financial accounts we are doing? The supplier has issued a debit note. We are adjusting the debit note to the current year's expenditure, which means in a financial accounts, the expenditure is already considered in a format of debit note. Either as a payment or as a debit note, the expenditure is already recorded in the financials. But that expenditure as a debit note in raw materials is not considered in the cost records. So, this is also a kind of expenditure which is considered in the financials but not considered in the cost records. So, financials is here and cost records is here. So, whatever which is not considered in the cost records, we are going to consider it and bring the profit to down. I hope it is clear. So, let's debit note of previous year. 3 crores. We'll take that. Next, previous year settlement paid during the current year and booked in the employee cost. That is previous year, current year, we are not concerned about. Employee cost, which means expenditure. Expenditure of previous year, which is paid in this current year. So, for current year, we had an expenditure of employee cost. This is recorded in the financials, but this is not considered in the cost records. Expenditure which is not considered in the cost records, reduce. 5 crores less. Then interest for delayed payments of PF booked in the current year as employee cost. So, as a PF payment for current year, it has been recorded in the financial accounts. So, this is also a kind of expenditure which is not considered in the cost records. Interest on delayed payment deposits of PF 2 crores. So, all these first 4 adjustments are expenditures which are considered in financial records but not considered in the cost records. So, whatever those kind of expenditures are there, that will be reduced from the profit as per cost records. I hope it is clear. Next, insurance claim received of previous year. Now, what is insurance claim received? Which means it is income. Income which is considered in the financial accounts. So, financial accounts profit is here, cost accounts profit is here. In financial accounts, already we have recorded an income of insurance claim, due to which the profit of financial accounts is here and cost accounts is here. We already have cost accounts and we need financial accounts. So, whatever which is not considered, we will consider it and bring up so that we will get the financial accounts profit. So, we'll add the insurance claim received of the previous year. Add insurance claim not considered in the cost accounts. You will get the profit as per financial accounts. I hope it is clear. So these are the adjustments which are very simple. Only this question is given. Only one question is given for profit reconciliation. I hope it is clear. Now we'll go to the question number 4 of profit reconciliation. Question number 4. This is from June 2024 attempt and also MQP of June 2025 attempt. So this is a mock question paper question which is relevant for the upcoming examination. So what is given in this question, we'll see. The cost accountant of Trinkus Textiles Mills Limited has arrived at a profit of 20,10,500 based on the cost. So this is the costing profit. And we have also financial accounting profit of 22,14,400. Sorry, 100. Now, as a cost auditor, you find the following differences between the financial accounts and cost accounts. Now, what are those differences? You can do it in two ways. Either take a cost accounting profit and derive financial accounts profit, or take financial accounts profit and derive cost accounts profit. Either of the way you can do it. Now, in this problem, we are going to take financial accounts profit and we are going to derive cost accounts profit. I hope it is clear. Now, first, adjustment. What is given? Profit on sale of fixed assets. What we already have? Financial accounts profit we already have, and we are going to derive cost accounts profit. Okay. Now, all these adjustments are already considered in the financial accounts but not considered in the cost accounts. I hope it is clear. Now, profit on sale of fixed assets. Profit on sale of fixed assets. We already have financial accounts. Now, if profit is already considered, which means if profit in financial accounts is 0, cost accounts is 0. Now, profit in financial accounts for fixed assets is recorded of 2,05,000. In costing, did it record? No. So, it is already in a 0. We need costing. We already have financials. To get 0, what I have to do? Whatever already recorded, I have to reduce that back. So, whatever 2,05,000 recorded in financial accounts as a profit, to bring it down to cost accounts, I will reduce it. Less. Next, similarly, loss on sale of investment. 0, 0. Now, in financial accounts, this is my financial accounts, this is my cost accounts. Now, in financial accounts, it is 0. But I have considered loss on sale of investment to be 33,600 in financials. But in costing, there is no loss which is recorded. Now, I need costing. I already have financials. Whatever 33,600 I have recorded, I'll add that back so that I'll match it. I hope it is clear. Add. Now, voluntary retirement compensation included in salaries and wages in financial accounts. So, what is this voluntary retirement compensation? Nothing but an expenditure. Expenditure in financials, already there is an expenditure. But in cost accounts, no expenditure is recorded. Whatever expenditure which is reduced in financial accounts, I'll add that back. Because that expenditure is not reduced from the cost accounts. Whatever which is not reduced, I'll add that back. Add the expenditures which are not considered in the cost accounts. I hope it is clear. Add. Now, next is donation paid. This is also an expenditure. Expenditure which is there in the financials but not considered in the cost accounts. Add. Next, insurance claim relating to previous year received during current year. Now, what is insurance claim received? Income. Income I have recorded in the financial accounts but not considered in the cost accounts. Incomes which are not considered in the cost accounts to be reduced. Less. I hope it is clear. Next, profit from retail trading activity. Profit is there in the financial accounts but not in cost accounts. Whatever profit taken, reduce it back. Less. I hope it is clear. Next, listen carefully. This is stock adjustment. Decrease in value of closing work in progress and finished goods inventory in financial accounts of 3,82,06,430 rupees. And as per cost accounts is 3,40,000 90 lakh 12,500 rupees. They have clearly given us that decrease in value of closing work in progress. If there is already a decrease in closing WIP, which means the profit has been already decreased. In financial accounts, take it as 0 and 0. Financial account 0, cost account 0. Now, in financial accounts, how much profit is decreased? It is decreased to 3 crore 82 lakh 6,430 rupees. In cost accounts, how much profit is decreased? 3 crore 90 lakhs 12,500 rupees. So, I already have financial accounts. I need cost accounts. Whatever the balance which is not reduced in the financial accounts, I will reduce that back to match it up. I hope it is clear. Already there is a decrease in closing work in progress, which means there is a decrease in profit. In financial accounts, it is decreased only to this limit. But in costing, it is decreased to this limit. So whatever the balance which is not decreased in financials, I'll reduce it back. I have to match both. That's it. So whatever the balance is there, I will reduce it. Now what is the balance? Difference is nothing but 8 lakh 6,070 rupees. I'll less that. I hope it is clear. Now, if you do add and less, you will get the answer. Main importantly, what will be the presentation? Mostly students will do add less, add less, add less. No, you shouldn't do that. Either take financial accounts profit or cost accounts profit. First, you have to write it add. Incomes not considered in the cost accounts. If you are taking profit or loss as per cost accounts, then first write all the add items. Then all the reduced items. After that, you will go for difference in valuation of stock between financial accounts and cost accounts. So first, you will write all the add or less. Then after that, you will go for decrease in value of closing stocks. I hope it is clear. After that, if any other adjustments is there, then you will consider that, and at last you will write profit as per financial accounts. So this is how your presentation will be there. Don't write add less, less, add less. No. Write all add items, then all less items. After that, at last you will write difference in stock valuation, and then your profit as per financial accounts. I hope it is clear. This will be a presentation. I hope question 4 is clear to you. Auto Parts Manufacturing Company Limited. So we'll start question number 5. This has been tested in December 2023 examination and June 2017 examination. Auto Parts Manufacturing Company Limited showed a profit for the year 2022-23 as 35,46,700. Okay. During the course of cost audit, the following transactions were noticed. Now, what are those transactions? Now, here they have given us the profit as per financial accounts, and we have to calculate the profit as per cost accounts. Okay. Financial accounts profit is given. We have to derive cost accounts profit. An old machine with a net value of 6,54,000 was sold off for 9,30,000, which means there is a profit of sale of old machinery. So here there is a profit. So if profit is already there in the financial accounts, it is already considered in the financial accounts, but it is not considered in the cost accounts. Whatever profit already considered will reduce it back. Less. I hope it is clear. Next. Dividend income was received amounting to 84,500 from investment. Income received. Income, which means financial account income is there. But in cost accounts, no income is there. Incomes which is not considered in the cost accounts. Reduce that back. Less. I hope it is clear. A sum of 58,000 was spent towards the CSR commitment. This is an expenditure for the organization. Expenditure already considered in the financial accounts but not considered in the cost accounts. Expenditure which is not considered in the cost accounts. Add that back. I hope it is clear. Next. The company was engaged in trading activity where purchase of goods was 13,50,000 and sales were 13,42,300 after incurring expenditure of 40,800. Now, if you do the trading activity total like purchases, less sales, less expenditure. Sorry, purchases plus expenditure less sales. You will do that, then you will get the whatever the thing is there, profit or loss. Here in this case, there is a trading loss. So this is nothing but a trading activity. So here there is a trading loss. So if loss is there, you will add that, which means in financial accounts, there is a loss, which is not considered in the cost accounts. So whatever loss which is not considered in the cost accounts, add that back. If it is trading profit, then reduce the trading profit because it is not considered in the cost accounts. I hope it is clear. So here there is a trading loss. As it is a loss, we will add that back. I hope it is clear. Next, some renovation work was carried out at a cost of 7,75,000 and its useful life was only for 5 years. So here useful life is given to us. Now, what's happening is, in financial accounts, the entire cost for renovation, the entire cost for renovation work, whatever it is there, 7,75,000, entirely it will be written. So in financial accounts, expenditure is written as 7,75,000. But in costing, this is considered as a renovation work charges, which means the benefit is there for more than one accounting period. So this will be amortized over the period of benefit. So in costing, 7,75,000 divided by 5. Whatever the amount is there, only that amount will be done. Sorry, I don't have calculator with me right now. So in costing, only 1 year amount will be recorded. But in financial accounts, the entire expenditure of 7,75,000 is recorded. Now, whatever the balance which is there. See, for example, in financial accounts, the expenditure is recorded to be 7,75,000. But in costing, only 1 year expenditure is recorded. So, whatever the excess expenditure recorded in the financial accounts, that will be added back. I hope it is clear. So, whatever the excess expenditure is there, that will be added back. 6,20,000. Excess expenditure added back. I hope it is clear. Next, the closing inventory of raw material was undervalued by 29,600 and that of finished goods was overvalued for 65,400. Now, they have mentioned as closing inventory. So, remember this for stock adjustment. Closing stock and profit will have same effect. If closing stock is increasing, profit will increase. If closing stock is decreasing, profit will decrease. Now, here they have told us that closing inventory of raw materials was undervalued, which means in financial accounts, profit is reduced for 29,600. That we will add back, and that of finished goods was overvalued. And how much it is overvalued? 65,400, which means profit is increased to 65,400 and it is reduced to 29,600. So whatever the balance is there is a increase in profit. Undervalued 29,000, overvalued 65,000. So whatever the balance 35,000 is there, that is overvalued, increase in profit. So that increase in profit, whatever it is there, we will reduce it back. I hope it is clear. So less net overvaluation of closing stock, we will reduce it. So this will less. I hope it is clear. So these are the adjustments. If you do add and less, then you will get the profit as per cost accounts. I hope this question is clear to you. Question number 5. Now we'll start with the next question, which is question number 6. This has been tested in December 2023 attempt. Now, what is this question? The profit as per financial accounts of Miss Kalimpong Himalaya Private Limited for the year 2022-23 was 1 crore 54 lakhs 28,642. Okay. So, financial accounts profit is given and we have to derive cost accounts profit. Okay. Now, here in this question, the both information of financial accounts as well as cost accounts is given to us. So, we have to understand that and do it. So, both financial accounts implication and cost accounts implication is given to us. And financial accounts profit is given to us. We have to derive cost accounts profit. I hope it is clear. Now we'll see the first stock adjustments which are given. Now, I've told you opening stock and profit will have adverse effect and closing stock and profit will have same effect. So remember that. Now, here whatever the amounts I have written is the difference between these two amounts. Okay. So the difference between these two amounts I have calculated and recorded here as I'm not having calculator. Now, opening work in progress. Now, opening stock is given to us as a financial accounts opening stock is 25,62,315 and cost accounts profit is 22,65,000. Now, as opening work in progress will have an adverse effect of the profit. Now, opening work in progress is 25,62,315 in financial accounts, which means profit is reduced. Profit is 25,62,315 in financials, opening work in progress. And in costing, it is 22,65,710. Now, what is the difference? 2,96,605. We have financial accounts only. We don't have cost accounts. Now, in financial accounts, is it overstated or understated? It is overstated than the cost accounts, which means if opening work in progress is overstated, profit is reduced. Profit is reduced to 2,96,605. So whatever profit reduced, you will add that back. I hope it is clear to you. Now, check only to the financial accounts. Don't consider about cost accounts because we don't have cost accounts. Okay. Now, what is the difference between 2,96,605? If we see in financial accounts, it is higher in financial accounts than cost accounts, which means whatever the balance is there, it is overstated. Opening work in progress is overstated in financial accounts, which means the profit is reduced in financial accounts. Whatever the profit reduced, we are adding that back. I hope it is clear. Similarly, opening finished goods. The difference is 26,71,130. Now here, it is understated. It is less in financial accounts than compared to cost accounts, which means it is understated. Understated of opening finished goods. If it is understated means profit is increased. Profit is increased to 26,71,000. Whatever increased, reduce it back. I hope it is clear. Next, closing work in progress. Closing work in progress and profit will have same effect. Now, the difference between these two amounts is 5,39,294. Now, what is given here? It is overstated in financial accounts. Overstatement of closing work in progress, which means profit is increased to 5,39,294. Whatever increased profit is there, we are trying to bring it down, reduce it. I hope it is clear. Next, closing finished goods. The balance between both is, whatever the difference is, 62,65,790. Now, whether it is overstated or understated, understatement of closing finished goods. Now, if closing stock is understated, which means profit is also reduced. Whatever profit reduced is there, you are going to add that back. I hope the stock adjustments are clear to you. Now, next, interest income from intercorporate deposits, which is an income to us. Income which is not considered in the cost accounts. Reduce it back. Less. Income which is not considered in the cost accounts but considered in the financial accounts. Reduce it. Donation given. Nothing but an expenditure. Expenditure not considered in the cost accounts. Add that back. Add. Expenditure not considered in the cost accounts but considered in the financial accounts. Add donations given. Next. Loss on sale of fixed assets. Loss in financial accounts, but that loss is not recorded in the cost accounts. Whatever loss which is not recorded in the cost accounts, add that back. I hope it is clear. Now, I'll come to these two adjustments in a meanwhile. Now, non-operating income. Nothing but an income. Income which is not considered in the cost accounts. Less. Voluntary retirement compensation, expenditure. Expenditure which is not considered in the cost accounts, add that back. Then, insurance claim relating to previous year received during the year. Insurance income. Insurance claim is nothing but income. Income which is not considered in the cost accounts, less. I hope it is clear. So, we'll see these. Interest income from intercorporate deposits, reduce it. Then, donations given, add that back. Non-operating income, less non-operating income. Voluntary retirement compensation, add it. And then, insurance claim relating to previous year, reduce it. I hope these adjustments are clear to you. Now, moving on to the main two adjustments. Value of cement taken for own consumption. Now, see, value of cement taken for own consumption, you do not consider it with profit. Do not link it with profit itself because this is not given as cost. This is given as value. So, consider only as an expenditure. Okay, value. Value of cement taken for own consumption. Now, what is the value of cement taken for own consumption which is given in the financial accounts? It is 3,82,960. 3,82,960. And in cost accounts, it is 3,65,426. Now, whatever the value which is considered here is 3,82,960. But in the cost accounts, it is 3,65,426. So here the value which is considered is 3,82,960. And in cost accounts, the value is only considered to be 3,65,426. We need costing. We already have financials. Whatever value which is not considered in the cost accounts, we will consider it now. We'll reduce it back. I hope it is clear. Don't link it with the expenditure, income, profit. No, nothing. Value is considered in the financial accounts higher than the cost accounts. Whatever value which is not considered in the cost accounts, you are reducing it back. That's it. I hope it is clear. So, you will reduce the difference. I hope it is clear. Next, cost of power drawn from own windmill. Now, at EB tariff, it is given just a moment. Okay. Cost of power drawn from own windmill. At EB tariff, it is given as cost accounts. And at cost, it is given as financial accounts. So, this is cost. This is EB tariff value. Okay. There is slight difference, slight confusion. So, don't get confused. Now, at EB tariff, it is given in the cost accounts. And at cost, it is given in the financial accounts. Now, what is EB tariff? In EB tariff, cost plus opportunity cost is also considered in the cost accounts. But in financial accounts, only cost which is incurred is considered, which is 36,20,370. Now, in cost accounts, opportunity cost is also considered and cost is also considered. How much it is? 49,56,325. Because of considering the cost of power drawn from own windmill, higher cost in the cost accounts, the profit in the cost accounts is reduced. Because of considering the cost of power at EB tariff in cost accounts, the cost is considered as higher cost. Because of higher cost, the profit is reduced in the cost accounts. But in financial accounts, only cost is considered. Opportunity cost is not considered. So, the profit is only reduced till the cost. But here, it is reduced more. So, whatever balance which is not reduced in the financial accounts, we need cost accounts. We already have financial accounts. So, we are reducing the balance. I hope it is clear. So, in cost accounts, it is considered at EB tariff value, which means cost is also considered, opportunity cost is also considered. Because of higher cost consideration, profit is reduced more in cost accounts than in financial accounts. So, we need costing. We already have financials. Whatever the balance is there, we are reducing it. I hope it is clear. So, we'll less the differences. You will do additions, you will do deductions, you will get the profit as per now cost accounts. I hope it is clear. So, this question is also clear. Now, Whatever we have so far seen the adjustments, only those adjustments are there in this question also. So this question you will do it. Okay. Question number 7. Try to work it out. The same adjustments, no new adjustment is there. So this you will try to work it out. This you will do it. 4th, 5th, 6th is considered. And we have also done the board material question for profit reconciliation which is given. I hope it is clear. So these are the important questions from Companies Cost Records and Audit Rules 2014. Now, if we come to the board material question of Companies Cost Records and Audit Rules 2014, all these are theory questions. Just if you have time, give it a revision or else just leave it. Okay. These are all theory. So see the theory and profit reconciliation. We have seen the profit reconciliation problem. Now this is a case study. Now see here, this is a Bacha question, illustration 13. Following data are available for inventory of raw materials. A is given, inventory is given, everything is 100 MT, aging 1 month, 2 months and 3 months. Original lab report purity is given as 100%, revised lab purity for 1 month old 100%, 2 month old 95% and 3 month old 90%, and original value is given to us. Now 1 month old is bought for 1000 per MT, 2 month 900 and 3 month 800. Information is given to us. Please calculate value of inventory of raw material A for cost records and cost audit. So we have to calculate the inventory value. Okay. Now, first inventory is already given. Aging is also given. Original lab purity, we doesn't need it. Everything is 100% quality. Okay. But what is revised? 100, 95 and 90. Okay. Now, in this 195 and 90, what is the purchase price? 1 month we have purchased for 1000. 2 months we have purchased for 900. 3 months we have purchased for 800. Okay. This is purchase rate. Now, if lab revised report, if it is 100%, the purchase rate is 1000. The revised rate is also 1000. Now, what is the report? 95% is only the lab purity. If 95% is there and the purchase rate is 900, so in this 900, what is the purchase price at 95%? 900 into 95%, you will get 855. And 800 into 90%, you will get 720. I hope it is clear. So, 100 into this, 100 into this, 100 into this. You will get the revised value. This is the total revised value. Now, whatever the amount is there, it is reduced to 12,500. Simple question. I hope it is clear. So, this is just about the cost audit CRA 3 form. Part A, Part B, Part C and Part D. And these are MCQs. We'll discuss that in MCQs video. So, these are the questions from Companies Cost Records and Audit Rules 2014. I hope it is clear. So, yes, we have completed first topic or concept, this practical questions. I hope everything is clear to you. If you have any doubts in any problem or if you want one more time to revise it, watch the video again. Even though if you have any doubts, join the Telegram channel. Link will be given in the description box. You can ask the doubt n number of times. I'll explain it till you understand it. Okay. Join the Telegram channel, you can ask the doubts and you will get the clarification. Okay. So now we are going to start with our next unit, which is the overview of cost accounting standards and GESA. This particular unit is very important for the examination because minimum to minimum 2 to 3 questions can be tested. 2 questions can be tested from alone cost accounting standards. So yes, whatever standards I have specified here, these are more than enough for your examination. So only these standards will be tested as practical part. Now, we are going to start with our first cost accounting standard, which is CAS2. CAS2 talks about capacity determination. Now, in this, I have given 3 practical questions to be Smart 25 questions. So, we are going to see those 3 practical questions from CAS2 capacity determination. Now, this is the first question, what they have asked us and how we have to present it in the examination. We'll see that. Question number 3, Brunt Limited
a manufacturing unit, provides the following extract from its records for the year ended March 31st, 2023. So they have given us the specified format and the information related to Brunt Limited. So for this, we have to calculate, you're required to calculate installed capacity. Now, what does it mean by installed capacity? Nothing but the capacity which this particular entity, which is called as Brunt Limited, can produce or can acquire in the entire year. So in a year, there will be around 365 days. So in the 365 days, without considering any of the interruptions, any of the breakdowns or any repairs or any lunch breaks, without considering any of the interruptions, if we are trying to calculate the capacity through which this production can be running, if we are trying to calculate it, that is called as installed capacity. So installed capacity can also be determined as the maximum possible output which an organization can derive when it is in the production schedule. So now we are going to calculate the installed capacity, and then they have asked us about the practical capacity. Now what is called as practical capacity? This can also be called as achievable capacity. Now in installed capacity, we are not trying to consider any of the interruptions, but will any organization practically run without any interruptions? No, there will obviously be some breakdowns, lunch breaks, or any interruptions, like any abnormal interruptions also can arise. So after considering those interruptions, if we are trying to calculate the maximum possible output, then that is called as practical capacity or achievable capacity. Next, they have asked us about the actual capacity. Now, practical capacity is different. Practical capacity, we are trying to calculate the capacity after considering the interruptions. But here, it is actual capacity. Actual, how the management or the organization is able to produce. That is called as actual capacity, which they have derived. That is called as actual capacity. Now, what is normal capacity? If we are trying to take the past 3 periods actual capacity, and if we are comparing past 3 years or past periods, 3 years or 5 years, whatever it could be, if we are taking that into consideration, by comparing that, by taking all the capacities, if we are trying to do the average for past periods actual capacity, then whatever the capacity we derive is called as normal capacity. Then ideal capacity. Now what does it mean by ideal capacity? Now in ideal capacity, what is our installed capacity? 100% maximum possible output. In this installed capacity, now what is actually we have derived? So what is the difference between 100% utilization and what is actual capacity? The difference between both is called as ideal capacity. Now, what does it mean by abnormal capacity, which means abnormal ideal capacity? Now, what is installed capacity? It is 100% without considering any interruptions if we are taking it, and actual capacity, what we have derived. The difference between both is called as ideal capacity. Now, here we also have something called as practical capacity, which is achievable capacity. So if we try to calculate the difference between achievable capacity and actual capacity, which means after considering interruptions, we have calculated this to be the practical capacity. In this practical capacity also, there is a difference of actual capacity. So actual capacity is differed from practical capacity. Whatever the difference is there, it is called as abnormal ideal capacity. I hope it is clear. So we will do these by understanding the concept. Now, installed capacity. For installed capacity calculation, how we are going to do? What information they have given us? The company specifications capacity for a machine per hour. So per hour, the machine capacity is 1500 units. And number of shifts per day. In a day, there are 3 shifts. And 3 shifts. Each shift to work for 8 hours. So here per hour, it is 1500 units. How many hours they are working for? Each shift 8 hours. How many shifts they are working for? 3 shifts. And there are how many days in a year? 365 days. Okay. After that, Sundays there are 52 Sundays. Other holidays are 12 holidays. These are nothing but the interruptions. Okay. And annual maintenance is done within these holidays, and preventive maintenance is also done in with these holidays. Now, normal ideal capacity due to lunchtime shift changes is 1 hour. So normally there is a shift break which is for 1 hour. This is also an interruption, which means in a shift they are working for 8 hours, but in that 8 hours also there is a 1 hour break. So only 7 hours they are working, 1 hour is the ideal time. Then production based on sales expectancy in the past 5 years is given to us. Now why they have given us the past actual capacity? Because by taking the average of these actual capacities, we will be able to determine the normal capacity. So because of this they have given us. And actual production for the year 81.50. So this is the actual production, which is called as actual capacity. I hope it is clear. So these are given to us. Now we are going to calculate the installed capacity. Now how we are going to calculate installed capacity? Will not consider any of the interruptions. So what is given to us? Per hour the machine capacity is 1500 units. And how many hours they are working for? For 3 shifts. Each shift they are working for 8 hours. 8 hours per shift. How many shifts? Into 3 shifts. How many days they are working for? 365 days. This is very, very important. Here 1500 units you have to write into 8 hours per shift into 3 shifts into 365 days. If you're just writing the number, you'll lose the marks. So remember it and write it in such a way. So installed capacity is days in a year into working hours per day into units per hour. You will get the how many lakh units are there. So 131.40 lakh units. This is our installed capacity. I hope it is clear. Next, practical capacity. Now, what is practical capacity? Which is achievable. Here, there are 52 days holidays and 12 days are also holidays and 1 hour there is a shift break. So, after considering these interruptions, what the capacity we design is called as practical capacity. Now, we'll see that. Now, 1500 units are per hour. How many hours they are working for? Not for 8 hours, only for 7 hours in a day because 1 hour is a lunch break. So 8 minus 1 is 7 hours. Into how many shifts they are working? 3 shifts. 3 shifts. Into are they working for 365 days? No. In 365 days, there is a gap schedule. 365 minus 52 days they are not working minus 12 days also they are not working. So the amount of days are 301 days. So, for this, if we do the calculation, whatever the capacity we get is called as practical capacity. See, 365 minus 52 minus 12, 8 minus 1, 7 hours into 3 shifts into 1500 units per hour. If we do it, we'll get 94.815 lakh units. I hope it is clear to you. Now, next is actual capacity. Now, how we are going to derive the actual capacity? Actual production is already given to us. This is the actual capacity, which is 81.50 lakh units. Already given in the question. So 81.50 lakh units is the actual production, nothing but actual capacity. Now here they have asked us actual capacity in percentage, which means actual capacity utilization. Now how we are going to calculate the actual capacity utilization? Nothing but from installed capacity, which means I have installed capacity of 131.40 lakh units. So I can, without considering any interruptions, manufacture or do the production for 131 lakh units. But how much I have done? I have done only actual production to be 81.50 lakh units. So what is my utilization? Actual capacity divided by installed capacity into 100. From this 131, I have only got 81.50. Like in your schools, you will do the percentage. How much percentage you have derived? For 600 marks, you have got 400 marks, which means 400 divided by 600 into 100, you will get how much percentage you have scored. Similar to that, actual production is 81.50 lakh units from installed capacity, which is 131.40. If you do the division into 100, you will get the percentage of actual capacity utilization. Actual capacity utilization is actual capacity divided by installed capacity into 100. I hope it is clear. Next, Normal capacity. Now what I have told you as normal capacity, past periods actual capacity will be taken and we'll do the average for that to derive the normal capacity. Now in the question they have already given us past 5 years production. So this is the past 5 years actual production data. If we are doing the addition and if you are doing the average for that for 5 years, whatever the capacity we derive is called as normal capacity. So you'll take all that 71.70 all which is given divided by 5, you will get the normal capacity. I hope it is clear. Next, ideal capacity. Ideal capacity, how we'll calculate? What is my actual capacity from my installed capacity? So from installed capacity, what is my actual capacity? The difference between both is called as ideal capacity. Now, here we are taking a thing called as actual capacity. Now, whenever you are taking actual capacity, remember one point. Always actual capacity will be expressed in terms of installed capacity. Now, if you see in CAS2, there is one provision which is called as whatever the terms which are there in entire capacity determination, everything will be expressed in absolute terms except actual capacity. Now, what is it called as absolute terms? Absolute terms are how they are used to determine it. Based on that only we will express it also. But actual capacity will not express it in based on absolute terms, but we will express in the terms of installed capacity. So wherever you are taking actual capacity, you have to compare actual capacity with the installed capacity and then you have to write it in the answer. If you have time, you have to write this as a note point that always actual capacity will be expressed in terms of installed capacity. This is an additional point, so you can write it down. So, what is ideal capacity? Actual capacity, installed capacity minus actual capacity. Installed capacity minus actual capacity. As you have taken the actual capacity, whatever the ideal capacity we get, 49.90. So, this is our ideal capacity. This should be expressed in terms of installed capacity, which means 49.90 divided by my installed capacity 131.40 into 100. I'll get the percentage of ideal capacity. I hope it is clear. Next is abnormal ideal capacity. Now, what is my practical or achievable capacity? 94.815. From this, what is my actual capacity? 81.50. Now, whatever difference is there, that is my abnormal ideal capacity. So, this can also be made expressed in terms of percentage. So, I hope it is clear. This is how you have to do the calculations. Now, how you are going to present it in the examination? You have to write, as this is being asked for 7 marks, you have to clearly write what does it mean by installed capacity, what does it mean by practical, what does it mean by actual capacity utilization. Ma'am, how we are going to get that? If you are being able to write it in your own words, write it in your own words. If you don't know that, then in my capsule, I have given all this in cost accounting standards. See, if we move to CAS2, there is a section called as definitions. In this definition, for each and everything, there is a specified definition. So, try to remember these definitions or understand what does that mean and express it in the examination. You have to write the definition or what does it mean as. And after that, you have to write how you are going to calculate it, which means days in a year, working hours per day, units per hour, and then you have to derive it and then you have to write in the down what is your installed capacity. This is how neat presentation should be there. I hope it is clear. So this is our first question of CAS2 capacity determination. I hope it is clear. Now, if we see, this is our ICMAI workbook. In our ICMAI workbook, they have given us about CAS2 capacity determination problems. Now, what is this? This is a simple problem which is given, so we'll check it out. Now, illustration 17. Following data are available with respect to cost elements. So, only 3 cost elements are given to us. What are those? First is raw material, next is variable cost, and next is fixed cost. They have given us 3. 70 lakhs, 10 lakhs and 30 lakhs, and the total cost is 110 lakhs. I hope it is clear. Next, actual capacity utilization they have given. Now, what is called as actual capacity utilization? Actual capacity divided by installed capacity into 100. By doing that, what did they derive as percentage? 50% is the actual capacity utilization. It is up to 50,000 units. So 50,000 units is the actual capacity utilization. Now, they have also given us normal capacity utilization. Now, what is normal capacity of 3 years? 80%. So, past 3 years actual capacity they have taken and they have done the average for that. And that average is about 80%, which is 80,000 units. Okay. Please work out the fixed cost per cost record as per CAS 2. They have asked us about the fixed cost. Okay. We'll do the fixed cost calculation. But before that, we'll do the analysis. Now, what is actual capacity utilization? Which means, for example, installed capacity is 100. In this 100, actual capacity is only 50. Actual capacity is only 50. So, if we do 50 divided by 100 into 100, we will get the 50 percentage. Which means, how much I can produce? I can produce 100 lakhs. But how much I have done? I have done only to 50 lakhs, which means how much I have utilized? I have utilized only 50%. I hope it is clear. Now, what is my normal capacity? Which means if I am doing the average as a comparison for past 3 years, for current year, which means in first year, I have got the actual capacity to be 50 lakhs. And in second year, I have got 60 lakhs. And in third year, I have got 80 lakhs. So, I am trying to compare my current year with past 3 years. So, what I am doing? I am doing an average for this. And whatever I get, the amount to be will be my budget or could be told as a standard. So, this is my expectation. So, how I am going to get the expectation? By doing the average of past 3 years. So, past 3 years, I am doing the comparison. Say, for example, I have studied day before yesterday for 3 hours. Yesterday for 2 hours. Today, I have studied for 5 hours. So, 5 plus 3 plus 2. 10 hours I have studied in an average for 3 days. So, today, I'll do the average for that. So, 10 divided by 3 will about 3.33 hours. So, we'll take 3.5 hours. So, if we are taking that average, tomorrow how much I'll be able to study? I'll be able to study maximum for 3 hours. So, I have calculated the average by taking 3 years past data. So, here also they have taken 3 years past data and they have got a budget or expectation to be 80%. But what is the actual? Actual is only 50%. What I have expected? I have expected that my capacity will be 80%. But my capacity is only 50%, which means there is underutilization of capacity. Yes or no? So, there is an underutilization of capacity. If there is any difference in the capacity, it will affect the fixed cost. So, that is what we are going to derive now. I hope it is clear. So, see what is given. As per CAS2, capacity utilization shall be considered as per actual capacity utilization as the same is significantly less than the normal capacity utilization. So, as per CAS2, fixed cost, we will get it with the capacity utilization, we will derive it with the actual capacity utilization. Now, whatever it is given in the question, actual capacity utilization is less than the normal capacity utilization. Here, normal capacity for 3 years is 80% and actual is 50%. Now, if we do the calculation for fixed cost. Now, this fixed cost, 30 lakhs, is for how much? 80% capacity, which is 80,000 units. So, this is my normal. Normal capacity is 80,000. Now, what is my actual capacity utilization? 50,000 units. So, if my fixed cost is 30 lakhs for 80,000 normal capacity, what will be for 50,000? What will be for 50,000? Remember clearly here they haven't given us actual capacity. This fixed cost is for actual capacity or normal capacity. But here they have given us actual capacity utilization, which means this 30 is not related to actual capacity utilization. We are going to derive that. So, 30 is for 80,000 and what is for 50,000? 30 into 50. So 30 into 50,000 divided by 80,000. I'll get 18.75 lakhs. So this is my fixed cost for 50% utilization. So what is my normal cost? 70. Raw materials. What is my variable? 10. What is my fixed? 18.75. So this is my total cost, which is 98.75. Now, why there is a difference in fixed cost? Because there is an underutilization of capacity of 80% to 50%. Fixed cost related to significant underutilization of capacity, which is in this case is 11.25. Priorly it was 30 lakhs. After that it is only 18.75 lakhs. Shall be reported as non-cost item to be part of reconciliation statement. I hope it is clear. So there is a difference in fixed cost because of underutilization of capacity, that you have to write it down. I hope illustration 17 is clear to you. Now we are moving on to the next question, which is the other question which is given in the workbook. So this question, CS2 illustration 25. Now what they have given. This is also a simple question. We'll see. Company G is making product C. So they are making product C. Okay. Capacity to manufacture product C is 800 MT per day. Okay. For the period April to December, product C is manufactured at the rate of 800 MT per day. So this is the capacity and they have taken that capacity from April to December. And from 1st January, company G has enhanced the capacity of product C to 1200 MT per day. So after 1st January, what happened? The capacity has been enhanced to 1200 MT per day. Okay. During the year, company G has manufactured product C as the mentioned below. So this is actual which is given to us. So what is the actual? 30 days they have taken in a month to be 30 days. 30 days into 9 months into 800 MT per day. They have given us okay. Then 30 days into 3 months. Now what is this 9 months and 3 months? April to December 9 months. From 1st January to March, they have taken it as 3 months. Okay. They have bifurcated it. 3 months into 30 days into 1150. This is actual which is already given in the question. Okay. Actual is 1150 this much. They have enhanced the capacity to 1200. But what is actual? They have only worked for a 1150 MT per day. Okay. So this is actual capacity. Company has given its records to cost order providing the capacity utilization. So what is capacity utilization? They have calculated, which means they have derived installed. Now what is installed capacity? Installed capacity considered as 360 into 1200. Now what is 360? I have considered it to be 360 days. 360 days into 1200 MT per day. This is installed capacity. Now what is capacity utilization? Actual divided by installed into 100. 73.96. Now they have already given us actual, they have given us installed, they have given us actual capacity utilization also. Now what they are asking us? Now what is actual? Actual they have only taken for 1150 MT per day. But what is the enhanced capacity? 1200. Now if the enhanced capacity of 1200, here also there is an underutilization of capacity. Now if that underutilization is not there, then what will be my capacity utilization? So by considering this 800 and 1200 MT, we have to derive the actual capacity utilization. I hope it is clear. So see here, cost order has reworked the installed capacity considering CAS2. We have reworked it again to taken into consideration 1200. So installed capacity for first 9 months is 800 MT per day. And for next 3 months is 1200 MT per day, which is already given in the question. Now, so reworked installed capacity is how we are going to rework it. Here we'll take 1200. That's it. 30 into 9. So for first 9 months, 30 into 9 into 800 MT per day. Next, after that, 30 into 3 into 1200 MT per day. We will get the reworked installed capacity. Now, what is reworked installed capacity? 3,24,000 is the reworked installed capacity. Now, from this, what is the actual production which has happened? Which is already given in the question. This is actual production. What is actual production? 319,500 already given in the question. So, this is my installed capacity, not this. So, this is my installed capacity which is given. This is installed capacity which is given. I have reworked it again because For 9 months, I am working for 800. Here, what did they derive? For entire 360 days, they have taken it to be 1200 MT. But is that the case? No. What is the actual case? For first 9 months, it is only for 800. For next 3 months only, it is 1200. So, we are reworking the installed capacity. So, this is our installed capacity, and what is our actual, which is already given in the question. So, actual divided by installed capacity into 100. This is our actual capacity utilization, but not which is given in the question. So, this is the rework, and this is which is given in the question. That's it. Simple. So, they have taken installed capacity to 1200 for entire 360 days, but that's not the truth or the case. For 9 months, it is only 800. For next 3 months, it is 1200. So, we are taking that and calculating installed capacity, comparing it with the actual and deriving actual capacity utilization. I hope it is clear. Simple question, nothing complicated is there. Okay. I hope this question is clear to you. Now, next we have another question of CAS2. We'll see that. Now, if we see, this is also the same question of actual capacity utilization. See, company G is manufacturing product C, having its byproducts PB. Installed capacity to manufacture C is 1200 MT per day. So, what is the installed capacity which is given? 1200 MT per day. And how many days they have given? 358 days with total of 365 days available and 7 days for annual plant maintenance. So, for annual plant maintenance, annual planned maintenance is for 7 days and totally it is work for 358 days. So, they have given installed capacity with 358 into 1200, which is 4,29,600 MT. Okay. Now, ratio of byproducts PB is for 1 MT of product C. Byproduct PB shall be 1 MT. So, this is about MT. Okay. However, company can utilize, sale, dispose of only 1100 MT of byproduct PB per day. So, how much they can do? 1200 MT per day is normally given. They have calculated the installed capacity to be 1200 MT. But what is normally installed capacity possible by them is only 1100 MT. They can't go beyond that. If you can't go beyond that, then that is called as installed capacity. So, total byproduct PB company can utilize, sale, dispose shall 1100 MT into 358, which is 3,93,800 MT. Okay. During the year, company has produced this much. This is actual which is given to us. Now, as per the cost starter, please calculate the capacity utilization as per CAS2. So, we have to derive what is installed capacity. Already actual capacity is given. Actual capacity divided by installed capacity into 100 will get the capacity utilization. I hope it is clear. Now, what is installed capacity? 1100 into 358 given in the question. This is the installed capacity. And what is actual production? That is also given in the question. 354420. Now, what is actual capacity utilization? Actual production divided by installed capacity into 100. Now, but what is new on this? It is already given in the question. No, but you have to write it as a note point that for this calculation, installed capacity, you should not consider 1200 MT per day. This is derived by company G. But what is maximum possible by them? It is only 1100 MT. So, you have to write it. So, installed capacity of product C shall be considered this much, but not this much. I hope it is clear. So, this is if 1200 into 359, this should not be considered. Only 1100 into 358 should be considered. I hope it is clear. So, these are the questions which has been told which is given in the workbook. And this is also the same whatever we have seen. We have just now seen like April to September, this is the capacity. October to March, this is the capacity. So, similar to that, same thing is there. So, this you can work it out. Same here also you will do the capacity utilization. Actual divided by installed into 100. So, this you can see it. I hope it is clear. So, this is the workbook questions which have been given for CAS2 capacity determination. I hope this is clear to you. Now, we are going to start with our next Super 50 question, which is from CAS2. We have already done the third question. We have 2 more questions in CAS2. We are going to do that. Okay. Now, here comes question number 5. Now, what is given here? This has been tested in June 2018. This is also some similar type of question because of underutilization of actual capacity utilization, because of underutilization of capacity, there is an abnormal cost which has to be incurred by this particular company called as Sunflower Dallen Limited. So they are asking us to calculate the abnormal cost which they have incurred due to underutilization of capacity, that we are going to calculate in this particular question. So what they have told us, we'll see. The following data have been available of Sunflower Dallen Limited. 3 years data is given to us, and what did they give us? They have given only 3. First is installed capacity, next is production per ton, nothing but actual production, and cost per ton. The poor capacity utilization in 22-23 was due to abnormal power cut. So there is some poor capacity utilization in this particular year. So in 22-23 there is underutilization of capacity, because of which they had to incur abnormal, because of our abnormal power cut, there is poor utilization of capacity. And the escalation in cost were 5% in this year, and 2020 and 21 the escalation costs were 5% in 21-22 and 7% in 22-23 based on 21-22. So here in 2021, whatever cost per ton is given, this is the actual cost. But here in 21-22, whatever the cost is given, this cost is not for 100 but for 5% escalation. That escalation 5% cost is also included in this particular cost. See, for example, if we take this to be 100, why only 100, ma'am? Just like that. If you want 10, you can take 10. If you want 1 lakh also, you can take 1 lakh. Just as an assumption, we are taking as cost per ton. So if we are considering this to be base year, why this base year? Because in this base year, no escalation factor is included. So this 1000, if you are taking it to be 100, here whatever it is there, this is not for 100 but for 105, because escalation 5% is also added to this particular cost, and here 7% escalation cost is added. So this is not for 100 but for 107. Okay. Calculate the abnormal cost due to power cut. So due to abnormal power cut, poor capacity utilization has happened in 22-23, due to which they have to incur some abnormal cost. What is the abnormal cost amount that we have to calculate? And what is the treatment of abnormal cost? We have to write it down. I hope the question is clear to you. Now, with the question, we can do 2 things. First, we can find out what is the base year cost per ton. So, cost per ton is given here 1000. So, what will be for 100 and what will be for 100 if these are for 105 and 107? We'll be able to calculate that. That is clear. And the other thing which we can calculate is, here installed capacity is given and actual production is given to us. So with actual production and installed capacity, what we can derive? We can derive actual capacity utilization. That is what we are seeing so far. So production divided by installed capacity into 100. We'll get actual capacity utilization. So these 2 things we can do with this question. After that, we'll see how the abnormal cost will be calculated. Okay. For this, I am using my notes calculation which I have done in the class. Okay. Now, see, 3 years data is taken and installed capacity in tons. It is already given in the question. 250, 250, 250. Same for all years because it is 100% maximum. That is possible by Sunflower. So, 3 years same, 250, 250 and 250. Now, what is actual production which is given? 240, 230 and 125. Sorry. We'll take that. Now, with this 2, we'll be able to derive actual capacity utilization. Actual production divided by installed capacity into 100. Then you'll get 96%, 92% and 50%. 230 divided by 250 into 100, 125 divided by 250 into 100. I hope it is clear so far. Now, cost per ton is already given in the question. 1000, 1077 and 1660. Now, whatever the cost which is given, we are taking to be base year cost. This is 100, this is 105 and this is 107. Next, we are trying to calculate what is the actual cost, 1000. If this is for 105, then what is for 100? 1077 into 100 divided by 105. You will get the amounts. So, these are the actual cost per ton for actual capacity utilization of 96%, 92% and 50%. I hope it is clear so far. So, we have actual production and we have cost per production. So, this is cost per ton and we have production per ton. So, we will be able to derive total cost of production. Yes or no? So, cost into production per ton. 1000 into 240. 1026 into 230. 1551 into 125. We will get the total cost of production. I hope you are getting this. Okay. So we have got the total cost of production. So far, whatever given in the question, we have derived. Now, we are going to calculate the abnormal cost. Now, how we will be able to derive the abnormal cost? See, abnormal cost will be calculated from the fixed cost. Now, from the fixed cost, we will derive first. What is fixed cost? Now, how to derive fixed cost? We will first calculate variable cost. From that, we will calculate the fixed cost. And from this fixed cost, we are going to derive what is the abnormal cost amount. Okay, I hope it is clear. Now, for calculating variable cost, they haven't specified in the question how to do it and what to do it. So, what we are going to use? We are going to use a formula of change. Now, how that is going to be there? Variable cost calculation. Difference in cost of production divided by difference in production in tons, which means difference in cost divided by difference in units. If we do that, we will get the variable cost. I hope this definition, this formula is clear to you. As they haven't specified anything about how to calculate variable cost, we are taking the change formula. Change in cost divided by change in units. Now, what are cost? Change in cost of production. That cost of production we have calculated just now. So, as this is the base year, we will not consider this. By comparing this with this and this, we are going to derive the variable cost. Okay. 2,40,000 minus 2,35,980. You will get the change. 2,40,000 minus, that is 4,020. Similarly, for next year, if we do the subtraction, you'll get 42,105. This is change in cost of production for 21-22, 22-23. We have not taken 2021 because this is base year. I hope it is clear. Now, change in production in tons. 240 minus 230, 10. 230 minus 125, 105. You'll take that. I hope it is clear. Now, what is variable cost? This divided by this. Cost divided by change in units. Change in cost divided by change in units. You'll get the variable cost 402 and 401. I hope it is clear. So this you will take it. Now, for first year, we haven't calculated the variable cost. So now what we are doing, we are taking an assumption that whatever, because this is the base year and there is no abnormal cost in 21-22, but there is an abnormal cost in 22-23, which is not I am telling, it is given in the question. In 22-23, there is abnormal power cut. But in 21-22, there is no power cut. So, we are assuming whatever variable cost is there in 21-22, that is the same variable cost in 2020 and 21. We are taking that assumption. So, variable cost 402, 402 and 401. Now, we have total cost. What is total cost? 1000, 1026, 1551 per ton. Now, this variable cost per ton, total cost minus variable cost will get fixed cost. I hope it is clear so far. So we have calculated variable cost and fixed cost. For variable cost calculation, we have used the change formula. I hope it is clear. Now, what we are going to do? Now, what is this fixed cost? Now, this fixed cost is for how much capacities? In 2021, it is for 96 capacity. In 21-22, it is 92 capacity. And in 22-23, it is 50% capacity. Now, see here. Whatever capacity is there in these 2 years, there is no much difference. 96% and 92%. Okay. 100% is the installed capacity. For installed capacity, 100%. So far, actual is 96 and 92, which is acceptable. Okay. We will not tell that overly underutilization happened. Now, because of this underutilization, obviously there will be a difference in actual and installed. Yes or no? So, what is the difference? 96 and 92, which is okay. But here in 22-23, it is 50%. So, there is a overall underutilization of capacity to be 50%. So, in this, whatever the abnormal factor is there, that we are going to find it out. Now, how to find it out? For that, first we have to find it out. What is the fixed cost as 100% utilization? Okay. Now, what is the fixed cost at 100% utilization? If we are getting that, then we will calculate, compare this amount with that amount, and whatever the difference is there, that will be our abnormal cost. Wait, I'll clear your confusion. Now, we have taken 2020 and 21 as the base year. So 2020 and 21 base year. In that year, what is the fixed cost? 598. 598. 598 is for how much capacity? 96% capacity, and the production is 240 tons. 240 tons, 96% capacity. Now, see, what is the fixed cost, total fixed cost in this particular year? 598 into 240, this is the total fixed cost. Okay. Now, this total fixed cost is for how much percent? 96% capacity. Now, clearly see, fixed cost will not differ with the total, but fixed cost will differ with the units. Yes, I know you all know this. Fixed cost will not have a change in total, but will have a change in units. Now, we have calculated total fixed cost. Now, in all the years, the total fixed cost should be 1,43,520 only. But this is for 96%. Now, what can be the fixed cost per ton for 100% utilization? 1,43,520 divided by installed capacity units, which is, this is the 100%. Yes or no? So, to derive 100% fixed cost for tons, we are taking total fixed cost divided by fixed cost installed capacity tons, which is 250 tons. So, we will get 574.80. This is 574.80 is 100% capacity fixed cost per ton. I hope it is clear. So, we have got 100% capacity fixed cost. Now, this 100% fixed cost utilization is this much. Now, how much the fixed cost has been increased because of its 50% capacity? If 50% you are utilizing capacity, which means you are increasing your cost. You are utilizing the less capacity, you are putting higher cost. Now, because of 50% utilization, your fixed cost has increased to 1,150. 1,150 minus 574.80 will be 575.92 or 576. Whatever 576 is that, this 576 is per ton. So, this is the abnormal variance which is occurred. Now, what is the total abnormal cost? 576 into 125 production tons. This is your abnormal total cost to be 72,000. I hope it is clear. So, this is how you have to present it in examination in clean and clear format. You have to take as many working notes as possible and make it more clear. Okay. I hope this is clear to you. If you have any doubts, you can ask me in the Telegram channel. I'll repeat it again. Or else watch this video again. You'll get the clarity. I hope this question is clear to you. So, we have calculated the abnormal cost. Now, how this abnormal cost will be treated? The 50% underutilization of capacity being due to power cut only, the company should consider possibility of captive generation. What is captive generation? In-house production they have to start. Because of underutilization of capacity, fixed cost is increased. So, they have to generate the capacity in the plant itself to have the more capacity. If the power cut is likely to persist, accordingly the investment needed, potential savings, etc. They have to do the investment and savings. Must be computed to determine the viability of such a decision. And where you are going to present it, abnormal cost must be excluded from the computation of cost and has to be shown under the para 7 of cost audit report as abnormal non-recurring cost. This is the presentation, which means how you are going to treat abnormal cost. You will reduce it from the cost and treat it as abnormal non-recurring cost in cost audit report. I hope it is clear. So, this question, I hope it is clear. Now, coming to the next question, question number 6. This has been tested in previous attempt, December 2024, recent attempt question. Now, what is this? Simple, nothing complicated. All the capacities are given to us, and based on the information stated above, you as a cost auditor are required to offer your comments on the performance of the company, your suggestions for the improvement. So, we are to calculate the performance of the company. See how the performance analysis will be done. Now, what is given to be the rated capacity? Rated capacity is given to 80 and 80, which means this is our installed capacity. I hope it is clear. Installed capacity is given to be 80 and 80. Now, what is hourly rate of production? 64 and 72. So, rated capacity is 80 and hourly rate of production is 64 and 72. 64 and 72. So, this is actual. So, we can derive the actual capacity utilization, which is 72 divided by 80 into 100 is 90% and 64 divided by 80 into 100 is 80%. The capacity achievement as percentage of rated capacity is declined from 90% to 80%. In 21-22, it is 72 divided by 80. In 22-23, 64 divided by 80, which means here the capacity utilization is 90%, whereas in this particular year, the capacity utilization is 80%. It is decreased. I hope it is clear. Next, in question itself, we have given us capacity utilization. This is the previous year. In previous year, we have utilized the capacity to 82.48%. But in the current year, we have utilized only 62.21. So, there is underutilization of capacity. Further, the capacity utilization is reduced. You will write that. I hope it is clear. Then, breakdown hours. In 21-22, we have taken the breakdown hours of 1015. But in 22-23, it is increased to 2177, which means breakdowns are happening so frequently, production is not running properly. So, breakdown hours have gone up to this time. So, you have to take the percentage. How you will take the percentage? So, you will take the percentage as 1015 minus 2177 divided by 1015 into 100. You will get 114.48. So, as this is increasing, so from how much to how much it is increasing? From 1015, it is increasing to 2177. What we are taking as the base? 1015 into 100. You will get 114.48. Is percentage important, ma'am? Yes, it is important. You have to write it in the examination. Next, similarly, you will do for next, planned maintenance. Planned maintenance in 21-22 is 422, whereas in 22-23 it is only 247. You have reduced the maintenance hours, which means maintenance is not being done properly, because of which breakdowns are increasing. So, you will write plant maintenance hours has reduced from 422 to 247. So, 422 minus 247 divided by 422 minus 247 divided by 422 into 100. You will get 41.47%. Next, similarly, you will do for the other also. Shortfall. How many orders? In 21-22, there was only a shortfall of orders of 677. But in 22-23, the shortfall of 792, which means the order hours have been reduced, which means the production is not happening. If order is not there, production will not happen. So, how much ideal hours because of loss of production? 677 in 22-23 and 792, which is increased. So, I'll write that. 677 minus 792, 677 minus 792 divided by 677 into 100. You will get 16.99%. So, similarly, you will do for all. Stoppage hours, running hours, production. Production is already given in the question. Now, what is production given? Production. It has been reduced. In 21-22, it was 3 lakhs. In 22-23, it is only 2 lakhs. It has been come down. So, actual production is also reduced. You will write all that. And like at last, you will give the suggestion. Therefore, the company should look into the aspect of proper maintenance, securing sufficient orders to avoid the lost time. Better utilization of capacity can be also achieved by improving the availability of vagons. The company may also carry out a cost-benefit analysis to have captive source of power. So, they have to follow all this. This is the suggestion which is given by the cost auditor. I hope it is clear. So, these are the questions as per CAS 2. So, we have done all the questions in ICMAI workbook and also in our material. I hope it is clear. Now, we are moving on to CAS 4. Now, what is CAS 4 question? 9th question. See, this is the 9th question. Now, what is this question? We are going to see. Abuna Electronics Limited is engaged in the manufacture of LED TV sets having its factories at Patna and Gujarat. The company manufactures picture tube at Patna, which is consumed to produce LED TV sets at Gujarat factory. So what's happening here? Abuna Electronics is having a LED TV sets manufacturing unit, and the factories are at Patna and Gujarat. There are two factories. What manufacturing happening in Patna? In Patna, they'll do the manufacturing of picture tubes, which is consumed to produce LED TV sets at Gujarat factory, which means in one factory they are manufacturing picture tubes which are utilized in the another factory. Nothing but captive consumption. In one unit they are producing, they are using the same in the next unit. Captive consumption. That is what our CAS 4 talks about. CAS 4 talks about captive consumption. And now the name has been revised. Now what is the name of CAS 4? Cost Accounting Standard on Determination of Cost of Production, Acquisition or provision of goods, providing of goods or provision of services. Provision of goods or providing of services. So this is our CAS 4. Now the following information pertaining to captively consumed picture tubes are extracted. Now what are the things given? Direct material, wages and salaries, direct expenses. Indirect material, factory overheads is given to us, and administrative overheads is given to us. 20% relating to production activity. Now, when we are calculating CAS 4, whatever administrative overheads related to production is there, only that will be considered when we are calculating the CAS 4 cost of production. Quality control cost, research and development, selling and distribution, and sale of scrap realized. For sale of scrap, what will be done? Sale of scrap is nothing but income. All these are cost. So from cost, we will reduce the sale of scrap. Then we'll get the total cost, whatever we have incurred. Profit margin is given to us. Okay. You are required to determine the cost of production for purpose of captive consumption in terms of Rule 30. Now, what is Rule 30 telling us? Rule 30 will tell us to determine cost of production. Now, Rule 30 is telling us that the transaction value will be 110% of cost of production. So whatever the assessable value is there for this Abuna Electronics Limited, for this particular transaction, the value is 110% of cost of production. So they are trying to ask to calculate the cost of production as per Rule 30 of CGST Rules 2017 and CAS 4. And the assessable value for the purpose of paying GST on applicable transaction. I hope it is clear. Now, how we are going to do it? Computation of cost of production as per CAS 4. Now, how computation of cost of production will be done? First, you will consider all direct cost, then indirect cost, then you will go for factory overheads. Administrative overheads, only 20% will be considered. 640 into 20, 128. Into 20%, 128. You will take that 128. Then after that, quality control cost, research and development, selling and distribution. All that will be considered. Sorry, you will not take selling and distribution because that is after. That is not in cost of production. Selling and distribution will not be taken. Quality control, research and development, administrative overheads. You will do the total less sale of scrap realized 130. You will get the cost of production. So this is cost of production which is calculated as per CAS 4. Now, what is Rule 30 telling us? Rule 30 is telling us to add 10% to the cost of production. If we add 10%, this is Rule 30. Now, after applying Rule 30, whatever the value we get is called as accessible value as per CGST rules. I hope it is clear. Simple. You just have to remember what is Rule 30. Now, is this enough for the presentation? No. This is not enough for the presentation. You have to write 3 points. First point is provision for Rule 30. If you want, it is already available in the CMAD capsule. You can look into that and write it down. Okay. You have to write Rule 30 provision. And then you have to write administrative overheads point. Note point that administrative overheads related to production will only considered when calculating the cost of production. You have to write that. And selling and distribution expenses will not form part of cost of production. You have to write that. And then after that, sale of scrap realized will be reduced from the cost of production. You have to write these 4 note points. I hope it is clear. So you have to write the note points which are very, very important. I hope it is clear. So I guess CAS 4 it is not given in the workbook. Yeah, CAS 4 is not given in the workbook. So this is CAS 4 question. This is enough. CAS 4 question is also completed. I hope it is clear to you. Now we are going to start with CAS 6. CAS 6 deals with material cost. 17 question. So yes, CAS 6 material cost December 2017. Now what is given here? Clearly understand that in material cost, the practical part will be tested in the point which is called as foreign exchange rate. So now what is the provision which is given as per CAS 6? So when the importation of raw materials are happening, if the importation is having any foreign exchange component in it, then for that foreign exchange component, to determine the value of a raw material which has been imported from the outside countries, to determine the value, we have to consider the rate on the date of transaction. Foreign exchange rate on the date of transaction has to be considered. I hope it is clear. Now, how to determine the date of transaction? There is a confusion for the students. Now, see in this particular question, I'm not going to take the entire question, but I'm going to explain about the foreign exchange component. See in this question, purchase of materials are happening for $50,000 and forward contract rate is given. This is not the contract rate. This is forward contract rate, which means whenever this contract is going to end, in that particular point of time, what will be the contract rate that is given to us? Forward contract rate. This is not the date of transaction. Next, on the date of importation, it is 64.60. Okay. And this is on the date of payment. Now, we have forward contract date rate and we have date of importation, date of payment. In these 3 dates, what will be the date of transaction? Here, when the importation has been happened, on that particular date, we will consider it as the date of transaction. So, date of importation will be the date of transaction. At that date, what is the rate which is given? 64.60. So, based on that only, we will do the calculation of purchase of material. I hope it is clear. Now, if we come to this question, in this question, what material is given to us and 3 dates are given to us. Date of contract is given, date of import is given, date of payment is given. Now, here, look carefully. They haven't given us date of forward contract rate, date on which the contract is entered. When the contract is entered, the transaction is also started. So, date of contract will be the date of transaction. If contract date is given, that will be the date of transaction. If contract date is not given and date of importation is given, that will be the date of transaction. Date of payment will not be the date of transaction. I hope it is clear to you. So, here date of contract is given. So, 64.40 will be our value to be considered. Material 35,000 into 64.40, you'll get the material cost. And what all will be included? Import duty, any duties, taxes or any charges which are paid to bring that raw material into place of production will be included in the material cost. If there is any subsidy, grant, incentive, that will be reduced. If there is any refundable of taxes, that will also be reduced. I hope it is clear. Import duty, freight inwards, add it. Insurance of import by sea, that will also be added. Everything will be included and this will be our total. And then cash discount. Cash discount will not be considered when we are calculating material cost. Bank interest for import credit. Bank interest is a finance item. Any finance cost will not be included. I hope it is clear. So, finance cost will not be included. You have to write that point. Finance cost will not be included. Just a moment. So, finance cost will not be included. Cash discount will not be included. You have to write the note points for this too. And CMAD credit refundable. Any taxes or credit which is refundable, you will reduce it. So, CMAD credit, reduce it. and they have given us weight reduction due to moisture loss. So there is any reduction of weight, and that too they have given in percentage. So this will not have an effect on the total cost of materials, but this will have an effect on units of materials because there is a moisture loss. So for moisture loss, we will not be able to determine the cost, but we can eliminate that from the units. I hope it is clear. So you will write all that. Total less NVAT credit, you will get the landed cost of materials. So here the total is different, 29,62,000. You can correct that out. Unit cost increased to this much because of due to weight loss. I hope it is clear. Note points are very important. First you have to write it about CA6. In CA6 foreign exchange rate, what will be considered on the date of transaction, whatever the rate is there, that will be considered. You have to write that as note point. The second note point, cash discount will not be considered when calculating cost of material. Bank interest is treated as a finance cost will also be not considered. And weight reduction due to moisture loss will have an effect on the units of material but will not have the unit in the cost of material. These are the 4 note points which have to be remembered and written in the examination. I hope it is clear and I hope that you are following up with me. So this is question number 17. I hope it is clear. Now if we see here in our ICMAI material, see here illustration 2 question is given for CA6. Purchase price is given to be $100 and they have given us 3 dates. What rate is given? Exchange rate on date of GRV. Now what is called as GRV? Goods receipt voucher. Okay, goods receipt voucher. On that date of goods receipt voucher, it is $80 and on the date of receipt of invoice it is 82. On the date of payment 84. Date of payment will not at all be considered as date of transaction. We have known that now. Date of GRV and date of receipt of invoice. Now what is date of GRV? Which means on the date on which the goods receipt voucher has been generated or given by the supplier. Whenever the supplier is already giving a goods receipt voucher, on that particular date itself, the date of transaction is started. So, voucher has been, he has written the voucher and supplier has gave the voucher. When the voucher has been given about the goods receipt, on that day itself, date of transaction to be considered. On the date of receipt of invoice, no. So, when GRV date is given, you have to consider the date of transaction to be GRV. When GRV date is not given, you can take date on receipt of invoice. Date of payment will not at all be taken. I hope it is clear. Purchase shall be booked in the books of accounts at the exchange rate on the date of transaction. Transaction date is GRV date. Purchase shall be booked at $80. 100 MT into $100 at the rate of $80, it is 8 lakhs. As payment rate is higher than GRV date, difference shall be treated as overhead. I hope it is clear. So this is question of CA6. Rest questions are very easy. We'll see that. Now, see here, illustration 7. From the following data available for company X for raw material Y, as cost order, please advise raw material cost as per CA6. Okay. They have given raw material cost, utilities, fixed cost, and they are asking us to determine raw material cost. Moreover, it is further provided that raw material cost consists of, in this raw material 70 lakhs, inclusions what all are there? Debit note of current year, debit note of previous year, credit note of current year, credit note of previous year. Now, if there is any debit note or credit note given for additional payment or for damage of goods, whatever it is the case, the debit note or credit note will be issued. Now, whatever the debit note amount and credit note amount relevant to current year, that will only be included in the raw material cost of current year as per CA6. Any previous year cost will not be included in current year raw material cost. I hope it is clear. So here, already what all are included? Current year debit note and credit note is included. So that is fine. That can be included. But previous year debit note and credit is also included in raw material cost. So whatever included or excluded is there, we are going to reverse the calculation. So raw material cost 70, whatever already added, debit note of previous year, we are trying to reduce that. Less debit note of previous year 7. Add add credit note of previous year. 1. This will be our total raw material cost as per CA6 for current year. So you will take 64, 20 and 10. 94 will be your total cost. I hope it is clear. Simple. Nothing is complicated here. Now here, there is another question. Nothing is there in this question also. Illustration 12. Given below are data pertaining to raw materials consumed in the process. What is given? Imported, local and self-manufactured raw materials. Everything is included in the raw materials only. Quantity is given, rate is given and value is given to us. Please work out CA6 raw material quantity that will go to the production. Now what is the total quantity? Raw material value that will be charged to production. What is the value? Now in a raw material, what are the types of raw material will be considered? Imported, considered, local, considered, self-manufactured, considered. All this will be considered in raw material cost. So there is nothing to eliminate from this. Imported, local, self-manufactured, everything will be considered. Purchased raw materials, everything will be considered in raw material cost as per CA6. So you can write that note point. Everything is inclusive of in CA6 raw material cost. Now how to calculate? Already it is given in the question. This will be the total quantity. This is the rate which is given. This is the total rate and this is the value. How will get the value? Into. If we do the multiplication, we will get the value. Value divided by quantity, you will get the rate. So raw material value 50.5 lakhs divided by 60,000. You are getting 84.1666, 84.17. So you will get the value, you will get the quantity. Just multiplication has to be done. Nothing complicated is there. Okay. These are like bacha questions. Will this be tested? Might be tested in MCQs. As you all have asked n number of times, I have taken this. But these are not so complicated. Will not be tested for 7 marks. You need not worry about it. But MCQs can be tested. Okay. Following data given for raw material X used in product A and B. So for product A, what is given? Recovered but not saleable. Used in product A. So whatever the material used in product A and product B is given and what is the recoverable amount from saleable. Quantity is given, rate and given, value is given. Calculate raw material cost. They have asked us to calculate raw material cost. Now what is raw material cost? 1 lakh, 0.7, 0.01, 0.69 lakhs. That's it. Used in product A, recovered but not saleable. So whatever recoverable amount and product A amount is there, that is entire raw material cost. Nothing is there to complicate here. So you'll bifurcate and write it. This is value of product A and this is value of product B. That's it. Cost of raw material. Already given in the question. You just have to add it. I hope it is clear. Now here, see, purchase value of raw material, transportation charges, demurrage charges paid is given. Now, if there is any transportation cost component included in raw material cost, this transportation cost, whatever it is there, this part will be calculated as per CAS 5. And in CAS 6, whatever transportation cost calculated as per CAS 5 is there, that will be included. Now, as per CAS 5 transportation cost, demurrage and detention charges are excluded, will not be included in the transportation cost. So, in CAS 6 raw material cost also, transportation charges will be included, but demurrage charges will not be included in determining the raw material cost. I hope it is clear. So, in raw material cost, what all will be included? Purchase value and transportation charges. Demurrage charges will not be included. Demurrage charges being penalty shall not form part of raw material cost. It shall be reflected at non-cost item part of reconciliation statement. I hope it is clear. Simple question. Now, this is also same. Raw material X is supplied by supplier A, B and C. 3 suppliers are there. They are supplying raw material and it is used in the production of D, E and F. Apply CA6 and calculate the rate and value of raw materials. So, okay. How much we have purchased for? 1000 into 25, 2000 into 27, 1500 into 23. This is our purchase cost. Okay. Now, what is the total quantity? What is the total cost? And what is the rate? Average rate for whatever we have purchased. So we will take the average, and that average will be used as the rate for D, E and F. Average is done. That has been used for D, E and F to know the total value and total quantity. I hope it is clear. So average value is used. So quantity, rate and value of raw material in product D, E and F shall be mentioned as below. They'll take the average and do it. That's it. I hope it is clear. Now this is also already given. From the following data given below, please work out as per CA6 the rate at which raw material shall appear in the product cost sheet. Raw material rates 100,000 MT. Normal evaporation loss is 2%, which is 20. And purchase rate is given 10,000. Purchase value is 100 lakhs. So, okay. Whenever there is a normal evaporation loss, this will be considered in units. So, we'll eliminate that in units. So 980 MT, but there will be no difference in the value. As we have seen here also, evaporation loss, weight reduction in moisture loss. This will be considered in units, but will not be considered in the cost. That I have told you. The same thing here also. In units will be considered, but value it will be same. 100 lakhs will be the value. There will be no difference in the value. Okay. Now what is purchase value? 100 into 1 lakh. Divided by 980 MT. So I'll get the purchase value. I hope it is clear. So don't waste much time on this. These are rarely to be tested in the examination. So I hope CA6 questions are clear to you. Now, there is another question of CA6 of average cost method. This is MQP June 2025 question, which is our recent MQP question. Now, what is there? We'll see. Opening stock of raw material is given to us 5,000 units at rupees 1,80,000. Purchase of raw material is given 17,500 for 7 lakh rupees. Closing stock of raw materials is also given. Opening stock, closing stock, purchase of raw materials is given to us. Okay. Closing stock value is not given. Only units are given. 3,500 units. Okay. Freight inwards 85,000. Self-manufactured packing material for purchased raw materials only 60,000. Okay. In the 60,000, administrative overheads related to marketing are considered. Administrative overheads only related to production will be included in material cost. But related to marketing, selling and distribution or any other administrative overheads will not be considered. So as 8,000 is not related to production of raw materials or purchase of raw materials, this 8,000 will be reduced from packing material cost. I hope it is clear. Next, demurrage charges levied by transporter for delay in collection is 11,000. Will we consider demurrage charges? Will not be considered. Normal loss of material due to shrinkage in transit is 1%. So there is a normal loss. Any losses, if there is normal loss, then it will be considered in units. No difference in total. Abnormal loss due to absorption of moisture before receipt of materials. So here you have to remember 2 points. There are 2 points which you have to remember from CA6 about the moisture loss. Just a moment. See, normal loss or spoilage before reaching to factory, which means if there is any normal loss or abnormal loss before reaching materials to factory, including cost of remaining materials, less if any recoverable amount from the insurance. So if there is any normal loss or abnormal loss before reaching it to factory, that will be considered in the cost. But if there is any shrinkage or evaporation, if normal, adjust with the cost. If it is not normal, that will not be, even though if it is, we are adjusting it with the cost, the shrinkage or evaporation will only consider in the units, but not in the total cost. I hope it is clear. So here in this question, shrinkage is given to 1% of materials purchased. So this will be considered in units, but will not be considered in the total cost. But here, abnormal loss due to absorption of moisture before receipt of materials is given to around 100 units. This will be considered in units and also in the cost. I hope it is clear. So first opening stock is given 5,000 units at 1,80,000, and then purchases 17,500 units at 7 lakhs. Opening stock plus purchases, and freight inwards is given 85,000. Self-manufactured packing material 60,000, in which 8,000 is administrative overheads related to marketing. So 6,000 minus 8,000, 52,000 will be considered. Clear so far? And then after that, what is given? Demurrage charges will not be considered. Write it in the note point. Then normal loss 1%. Now what is the purchase amount? 17,500 units. So in the 17,500 units, 1% is normal loss, which means 175 is the normal loss. I hope it is clear. Normal loss. Then abnormal loss 100 units. Abnormal loss 100 units. Now what is the cost of abnormal? Now purchase of raw materials are taken for 7 lakh rupees, and when bringing that we have incurred the freight inwards, which is 85,000. So this is the total cost which we have incurred. Cost divided by units. Cost divided by units. 7 lakh plus 85,000 divided by 17,500 into hundreds. So by doing this we'll get the rate. What is the rate? 7 lakh plus 85,000 divided by 17,500. We are getting the rate to be 44.857, something like that. Now, this is the rate of abnormal cost. Now, how much abnormal units are there? 100. So, 4485.7, which is nothing but 4486 is the abnormal cost. I hope it is clear. So, nothing but cost divided by units into 100 units. We are doing it. I hope it is clear. So, this is how abnormal loss and abnormal loss will be calculated. Then, opening stock plus purchases less abnormal cost less normal loss. We will get the cost of raw materials. From this cost of raw materials, we have to take the closing stock. Now, what is closing stock? 3,500. Now, 3,500 units are given. Cost is not given. So, what is the value of closing stock? We are going to derive it. Value of closing stock. What is the total cost? This is the total cost which we have calculated. Total cost divided by how much is the amount? Abnormal loss will not be considered here. 17,500 plus 5,000 minus 175. Normal loss will be considered. Into 3,500 units, we will get the value of closing stock. I hope it is clear to you. So, this is how value of closing stock will be mentioned, and note points are very, very important. You have to write the note points in the examination. So, yes, this is regarding CAS 6. I hope CAS 6 is clear to you. Now, moving on to the next CAS 7. CAS 7 is also very easy. Employee cost. I have given 22nd question. Now, see here. 27nd question. A steel company which produces iron casting pipes and wrought iron is covered under cost audit according to the company's cost records and audit rules 2014. From the expenditure data relating to 2021, determine the employee cost according to CAS 7. Okay. Now, what will be included in the employee cost? Salaries, wages, other allowances include. Bonus include. Contribution to provident fund include, because all these are forms of payments. Okay. Wages to contractual labor. For this, you need to understand one provision of employee cost. So, in this provision of employee cost, what all will be included? Employee cost paid to normal labor, part-time labor, contractual labor. Everything is included. But in this contractual labor, there is two bifurcation. If the cost is paid to employees of contractor, which means contractor we have hired, he had bought his own employees. For them, we are paying employee cost. That will not be included in the employee cost as per CAS 7. But if we are paying any employee cost for contractual labor, which means they are working under us for a contract basis. For them, if we are paying, then that cost will be included in the employee cost. But if we are paying the employee cost or salary for the contractor's employees, that for them, the employee cost will not be included. I hope it is clear. Now, here in this question, what given? Wages to contractual labor. So this will be included because we are paying to contractual labor. But here, if they have given wages to contractors labor, it will not be included. I hope it is clear. Next, employees welfare include. Abnormal cost due to strike. This will not be included in employee cost. You have to write a note point. Abnormal cost due to strike will not form part of employee cost. You have to write the note point. Then, VRS payment for closure of rod iron section of the plant. See, what is VRS payment? Voluntary retirement scheme payment. This, as per CA7, is called as separation cost. Separation cost. So, whatever separation cost is there, as per CAS7, this should be amortized over the period. Amortized over the period of separation. Amortized over the period of separation. Now, this will be amortized over the period. Now, if there is any kind of separation cost which is not amortized, why an unamortization is done? Because for whatever employees we have taken, they have vacated from our office because our entire business or that particular project was closed. We have stopped the project. We have stopped the process. We have stopped that particular segment of business, due to which there is a separation between the company and the employees, for which we have to pay some separation cost. And if separation cost is there, that has to be amortized. But as the business is not there, we have not amortized it. So this will not form part of employee cost. I hope it is clear. VRS payment for closure of rod iron section. This will not form part of employee cost because this is not there. The business is only not there. For what purpose we are going to amortize? For what purpose we need to include it in the employee cost? This will not be included. I hope it is clear. Arrears salary. Arrears not related to current period will not be included in the cost of current year. I hope it is clear. Compensation paid against the past periods against the court order. Any compensation which is paid as an employee cost for past periods related to court order, that will not be included. If court order is not there but you have paid for past years, that can be included. But because of court order, if you have paid any employee cost as compensation, that should not be included in the employee cost. I hope it is clear. So based on inclusions and exclusions, you can write it. Write the note point. You'll get the amount. I hope it is clear. Note points are very, very important. Do not forget the note points. I hope it is clear. Now, are there any CA7 questions? Yes, it is there. Now, CA7 employee cost, illustration 24. What they have asked us, we'll see. Gross pay is given, tax paid is given, and net pay is given. Okay. To comply with CA7, as cost order, which employee cost you shall consider for cost records? As per CA7, gross pay shall be considered for cost records, which in the case of 12 lakhs. So, gross pay will not consider net pay. Reasons: company has shelled out 12 lakhs, out of which 9.6 have gone to kitty of employee, whereas balance 2.4 is given to the government. But as per CA7, entire employee cost is 12 lakhs. Inclusive of tax, inclusive of everything, we will consider the employee cost. That's it. Simple. Yeah, that's it. I hope employee cost is done. CA7. Yeah, it's done. So yes, employee cost CA7 is done. I hope everything is clear to you and you are understanding and you are being able to follow it up. If you have any doubts, then you can ask me in the Telegram channel. Okay. Next, we are moving on to CA8. CA8 cost of utilities. So for this, I have given two questions. Okay. We'll see there's two questions. December 2018. This is a simple question of question number 24. Now, what is that? For this, you need to understand one point, that whatever the utilities are there, even if these are self-manufactured utilities, Even these are self-manufactured or purchased utilities, they can go for transfer of utilities. Okay, transfer of utilities can be done. Now, if there is a transfer, the transfer can be inter-unit transfer or inter-company transfer. Now, if it is inter-unit transfer, what all should be included? If it is inter-company transfer, what all should be included? That is the question which is given here. Only one point you have to remember related to administrative overheads. Okay, we'll see now, you'll understand. A chemical unit generates in-house power to meet its shortfall from grid supply. It has 20% surplus power which it can supply to the adjacent units, which means 20% it is having, which is it is trying to transfer it. Okay. As per CAZ, let us know what if it is inter-unit transfer, what if it is inter-company transfer. Okay. All things which is given. Now, in cost of utilities, coal consumed less ash will be included, diesel oil included, water stores, salaries of powerhouse staff, repairs and maintenance, depreciation of plant and boiler, share of administrative overheads. Now, this share of administrative overheads will not be included in inter-unit transfer, but this will be included in the inter-company transfer. In inter-unit transfer, what all will be included? Distribution cost, any other cost, factory overheads, or any other cost which is related to utilities. Everything will be included. But share of administrative overheads will not be included in inter-unit transfer, but it will be included in the inter-company transfer. Only one point you have to remember. Next, interest on asset purchase. Now, interest on asset is nothing but a finance item. Finance item will not be included in cost of utilities. It is clear. Distribution cost will be included. So, first you have to write the provision. The cost of power generated for the purpose of inter-unit transfer shall comprise of direct material cost, direct employee cost, direct expenses, factory overheads and distribution cost. Share of administrative overheads will not be considered in the inter-unit transfer. And interest on asset purchase, as it is a finance item, that will also not be considered in the inter-unit transfer. Eliminating this two, excuse me, eliminating this two, whatever it is there, you will write all that and you will do the total. And in the question, they have given us the units. If you do the division of units, you will get per unit. I hope it is clear. Next, cost of power generated for intercompany transfer shall comprise of direct material, direct employee, direct expenses, factory overheads, distribution cost, and share of administrative overheads. But interest on asset purchase will not form part of cost of utilities as it is a finance cost item. I hope it is clear. You'll add share of administrative overheads. You'll do the total. You'll divide it with the units. You'll get per unit. Simple question. Nothing complicated. I hope it is clear. Presentation is very, very important. I'm stressing it out n number of times. Questions are easy, ma. You will understand. You will be able to write it down. It will be like snap to you. This is simple. We have done this bacha problems. If you understand the concept, why we are doing it, why we are including, why we are not including, what is the provision, if you know that, everything is in your tips. Bacha. Waste problems these are. But how to get more marks, presentation is important. So focus on presentation, write neatly. Like, don't do the borders, don't do designs and all to make it neat. Neat presentation with formats, underlinings, putting the units, rupees symbol. These are important. I hope it is clear. Okay. Now, here, question number 25. A manufacturing firm has its own power plant to cater its need in manufacturing process. Its 1 month data is given below. Okay. Number of units produced is 100 lakh units, in which 5% is used by generating unit. Okay. Here also there is a generation of utilities. Okay. Now, they have asked us to prepare a cost sheet. They have not asked to determine what is cost of utilities. They have asked us to prepare cost sheet. Okay. In cost sheet, everything will be included. You have to bifurcate and write it down. Okay. Coal. How you will write 300 metric tons at the rate of rupees 30,000 per MT. 300 into 30,000 material cost. In material cost, oil will also be there. 5 into 1,60,000. Then cost of water, 6 lakh liters into 3 per liter. 6 into 3. Coal, oil and water. These are your material cost. Total material cost, you'll write total material cost. I hope it is clear. After material cost, material, and material. Now next, steam boiler cost 55 lakhs with residual value 5 lakhs after life of 10 years. So here residual value is given, life is given, cost is given. We can determine depreciation. 55 minus 5 divided by 10 years. We'll get the depreciation of steam boiler. Similarly, cost of generating plant 90 lakhs with no residual value, depreciation charges 10%. 90 into 10% depreciation. So after material cost, you have to write the labor cost. After that, you will go for depreciation. Generating plant, boiler plant. You will write the depreciation cost. I hope it is clear. This is depreciation, this is depreciation. Then wages. Generating plant. 100 skilled workers, 30,000. 150 helpers, 20,000. 100 into 30,000, 150 into 20,000. I hope it is clear. Similarly for boiler plant also. 60 into 20,000, 25,000, 100 into 20,000. You will write it for the boiler plant. Wages. First material, then wages, then depreciation. Total depreciation. I hope it is clear. Then repairs and maintenance cost 5 lakhs. Share of administrative charges 20 lakhs. You will write repairs and maintenance administrative expenses. Then realization for sale of ash. This is an income to us. So that will be reduced. Less realization from scrap. Net total cost this much. Effective units 5% is self-use. So how much units? 100 lakh units in which 5% is self-use. So only 95 units are there. 95 lakh units. This is the cost per unit. Simple. I hope it is clear to you. Okay. So yes, we have completed CAS 8 also. I hope these questions are clear to you. And in board material, not much questions are there. You can see it. These are very simple. So here whatever they have given, following data are available as per steam. Gross generation of steam is 3,50,000 MT. Normal line losses is 5% and steam value is 9,000. What is the steam charge? Okay. Steam generation is given already. Normal line loss is given in this 5%, which means 3,50,000 into 5%. You'll get 17,500. So how much is this 3,50,000 minus 17,500 is 3,32,500. What is the value of steam? 9,000. So 9,000 lakhs into 1 lakh divided by 3,32,500. We are getting 2,707 per MT to product. That's it. They have calculated the steam cost. Nothing much. Already everything is given in the question. Just you have to do it in the calculator. So can be tested in the MCQs. So here see electricity cost is there. Payment is done. Cost minus payment. Total cost. That's it. Nothing complication is there. So these only will be tested in the MCQs. Okay. So yes, CAS 8 utility cost. I hope everything is clear so far. Okay. Now we're moving on to the next standard, which is cost accounting standard 10. So in this I've given you two questions, 29 and 30. Now what is CAS 10? CAS 10 talks about direct expenses. Okay. Now in direct expenses, what all will include? Everything will be included. What all should be included? What all should be excluded? Simple, if you know that provision, CAS 10 practical problem is also easy for you. Question number 29. We'll see. Now, Truma Limited, a manufacturing unit, produces two products, PB and PS. Okay. The following information is extracted from the books of the company for the year ended March 31st, 2023. Okay. They've given us two products, product PB and product PS details. Now, what is given to us? Units produced is given in quantity, units, and units sold is also given to us. Machine hours utilized is given to us. Design charges in rupees is given. Software development charges also is given in rupees. Now, royalty paid on sales is 6,09,000 rupees 2 per unit sold for both the products. And royalty paid on units produced is 3,78,000 rupee 1 per unit produced for both the products. Okay. Higher charges of equipment used in the manufacturing process of product PB alone is 53,000. Note no adjustments related to closing stock has to be done. Okay. So this is what the information which is given to us and what they are asking us to do. They have asked us to calculate the direct expenses as per CAS 10. Now, according to CAS 10 direct expenses, we have one provision called as royalty expenses. So, if there are any royalty expenses or royalty thing, this royalty should be amortized over the period of benefit. Amortized over the period of benefit. Now, when this amortization should be done? If the royalty expenditures are paid on lump sum basis, which means at a time lump sum amount is paid as a royalty. In that point of time, the amount should be amortized over the period of benefit. In this entire question, they haven't mentioned about the lump sum payment. So, this need not be amortized. Okay. Now, what is the royalty paid on sales is given to us 6,09,000 rupees 2 per unit sold. Now what are units sold? 1,68,000. So for product PB, the royalty expenses will be 1,68,000 into 2 because it is rupee 2 per unit. 1,68,000 into 2. The answer is 3,36,000. 3,36,000. And then for here 1,36,500 into 2. The answer is 2,73,000. You'll write that. After that, royalty on purchases. Rupee 1 per unit. 2,10,000 into 1. 1,68,000 into 1. You'll write that. Add royalty charges. After that, they have given us higher charges only for product PB to be 53,000. So add higher charges of product PB 53,000. And in question, they have given us design charges and software development charges. All these will form part of direct expenses. Total direct expenses, simple, already given in the question, you have to just form it in a statement. Now, note point. In note point, what you will write? You can write it as design charges, software charges, higher charges and royalty income. All will form part of direct expenditure cost. And in case of royalty on purchases and in royalty of sales, lump sum payment is not paid as royalty. So, this need not amortize over the period of benefit. So, this note point you have to write it for this particular question. I hope this question is clear to you. Now, we are moving on to the next question, which is question number 30. See here. A company bought a new technology for its auto component unit for two products, product A and product B. So, for two products, they have bought a new technology. The condition was to pay the lump of 10 lakhs. So, here in this question, they have given us that lump sum payment is made for 10 lakh rupees, which means if lump sum payment is there, amortization should be done. Equally distributed for both the products, which means 5 lakhs lump sum payment is done for product A, 5 lakhs lump sum payment is done for product B. And the life of service life is for 5 years. So, the period of benefit is for 5 years. If lump sum payment is done for product A of 5 lakh rupees and the service life is for 5 years, for 1 year it will be 1 lakh rupees. Simple. Then, royalty of rupees 3 per unit produced. What is the units produced? 30,000 and 25,000. So, this is the royalty expenses paid. Okay. The vendors, technicians were to be paid traveling expenses for the maintenance. Okay. The company incurs cost for software services and interest for borrowing 1,20,000 rupees. The following information is extracted from the books of company. Now, you are required to calculate the direct expenses as per CAS 10. Okay. Now, royalty paid on production, already given 30,000 into 3 and 25,000 into 3. Here it is 90,000 and here it is 75,000. So, royalty paid on production is 90,000 and 75,000. Whereas, for new technology advancement, the royalty which is paid is amortization cost of technical know-how, 1 lakh and 1 lakh. How 1 lakh? 10 lakhs equally distributed for A and B, 5 lakhs and 5 lakhs. Amortization period is 5 years. So, for 1 year, 1 lakh and 1 lakh. And royalty paid is 90,000 and 75,000. I hope it is clear. Higher charges already given in the question, 8,000. Travel charges, 10,000 and 10,000 travel charges are also included. Software service charges, 24,000 and 20,000. Now, interest on bank borrowing. Interest on bank borrowing is nothing but a finance item. Any finance cost or finance item cost will not be included in cost accounting standard 10. So, you have to write that. Interest on bank borrowing shall not form part of direct expenses. So, this can be your note point. For product A and B, lump sum amount of 10 lakh rupees has been paid. So, as per CAS 10, if there are any direct expenses as lump sum payment shall be amortized over the period of benefit. In the given question, the period of benefit is 5 years. So, you can write this as a note point. Simple question, no much complication. You just have to understand the implication. I hope it is clear. So, CAS 10 is also done. Are there any questions for CAS 9? CAS 9 is theory. You can see the theory question. If we come from the start, we'll understand. Okay. So, this is about the format. You can see this format. This is CAS 6. We have covered CAS 6. And CAS 2 done. CAS 6 done. CAS 8 is done. This is also 8. Employee cost, raw material, direct expenses, raw material, capacity determination, utilities, repairs. These are theory. Depreciation is also theory. Packing materials also theory. Theory, you can see the theory questions. I'm not getting into the theory part. And yes, we doesn't have a question related to CAS 10 direct expenses in the recent workbook. So I hope it is clear. Rest all in workbook, no practicals are given, only theory is given. Theory, please look in once. If you have time, if you don't have time, just focus on the theory which we have discussed in the marathon, or if you have taken class from if my lectures you have taken, then whatever we have discussed in class, that theory is more than enough. You will be able to write that in the examination. You need not worry about it. Okay. Now, CAS 21. We're moving on to CAS 21, question number 37. 37, 38, 39, 40. Now, okay, we'll see this. Question number 37. Standard material requirement to produce 1000 units of product X is 1200 units of material. So, I have to do the manufacturing of product X. If I want 1000 units of product X, for that I need to utilize 1200 units of material. Okay, at the cost of standard price of 60, at 60 per unit. Okay. The standard allows for the rejects of 25% of input. So, in this 1200 units of material, 25% is rejects. Okay. It is estimated that 1/3 of rejects can be reworked, which means, see, what is 1200 into 25%? 300. 1200 into 25% is 300. So, 300 are rejects. In this 300, 1/3 can be reworked again, which means 100 units can be reworked again at an additional cost of 20 per unit, which means rejects can be reworked again. Now, what is scrap units? In 300 rejects, 100 are reworked again, which means whatever 200 units are there, those are scrap. 200 units of scrap can be sold at rupees 5 per unit. I hope this discussion is clear so far. Next, this is about the standard. Now, what is given for actual? During the particular period, units produced were 19,500. So, what is actual units produced for product X? 19,500. For this 19,500 units of product X, I have utilized the material to be 24,000 units. 24,000 units of material is utilized. And this 24,000 units of material is utilized at a standard cost of 60 per unit. 60 per unit. I hope it is clear. Next, how much rejects are there? From this 24,000 units, 7,000 units are rejects. And in the 7,000 units, 2,500 units are reworked again. Okay. Reworked again at a cost of 51,000. Okay. The balance units. What is the balance units? 4,500 units. These are scrap units, which are sold for rupees 5 per unit. I hope the question is clear to you. So whatever question is clear, we have bifurcated and understood the question. Now, what they are asking us? They are asking us to calculate the material quality variance and scrap variance. Okay. Now, whatever we have done as the analysis, that first we will write in a tabular format. Okay. Quality control cost is the cost of resource used for the quality control procedure. Now, standard material cost. Material 1200 units. Standard cost. How much is the cost? 1200 into 60. 72,000. This is the cost. In which rejects are 300, reworked 100. 100 units are reworked for a cost of 20 per unit. 100 into 20, 2000. And scrap are 200, which are sold at rupees 5 per unit. 1000. Now, what is the cost I have incurred? Material cost. What is the again cost I have incurred? Reworked cost. Now, what is the scrap? By doing scrap sale, I have got the income. So, reduce this. Okay. First two are cost. This is income. This is not the expense. So, we'll reduce this. Now, what is the total expenditure of standard cost? 73,000. 73,000 is for how many units? 1000 units of product X. For 1000 units of product X, rupees 73 per unit. I hope it is clear. Next, actual material cost 24,000 at 60 per unit, 14,40,000. Rejection 7,000, reworked 2,500 at rupees 20 per unit. Sorry, they have already given in the question 51,000, and scrap is 4,500, rupees 5 per unit, 22,500. This will reduce. This is cost, this is cost, this is income. Units produced. How much is the units produced? 24,000 minus 4,500, 19,500. This will be our actual cost per unit. So far, I hope everything is clear, because whatever given in the question, we have written in the tabular format. That's it. Now, material quality variance. Now, we have to differ the quality here. Yes or no? Now, actual material cost. Whatever actual material cost is there, this is our actual material cost, 14,68,000 minus actual quantity into standard rate. I hope it is clear. So, nothing but actual quantity into rate. Here, whatever rate is given, 60 and 60, both are same rate. So, yes, actual quantity into actual quantity into actual rate minus actual quantity into standard rate. Actual quantity into actual rate is nothing but actual material cost minus actual quantity into standard rate. What is actual quantity? 19,500 into what is the standard rate? 60. Sorry, 19,500 standard rate. What is standard rate? 73. Whatever we have calculated is the standard rate. So, standard rate, if we take 14,23,500 will be our answer. So, actual material cost minus actual quantity into standard rate, you will get AdWords to be material quality variance. I hope this is clear. Now, they have asked us about the scrap variance. Now, what is scrap variance? What is the cost of scrap we have incurred for standard? 1,000. What is the cost of scrap which we have incurred? Here, 22,500. Now, if we do the comparison of this scrap sale and this scrap value, the matching will not be there. We can't do the comparison for both. Why we can't do the comparison for both? Because here, the standard information is given for 1,000 units of product X, whereas actual information is given for 9,500 units of product X. Now, can I compare 1,000 units information with 9,500 units information? No. So, for that, I have to calculate the revised standard information. With that revised standard information, I will determine what will be my scrap value if the standard is also for 19,500 units. Then I will do the comparison for both the scrap values. I'll give you the clarity. Now, see, first product X. Here, first it is given for 1,000 units. Yes or no? but actual it is for 19,500 units. Now we are going to change this 1000 units information to 19,500 units of information. Okay. Now for 1000 units of product X, how much material I have utilized? 1200 units of material. So for 19,500 units of product X, how much material I have to utilize? 19,500 into 1200 divided by 1000. I have to utilize 23,400 units of material. I hope it is clear so far. For 1000 units of product X, I have to utilize 1200 units of material. Then for 19,500 units of product X, how much material I need? I need 23,400 units of material. Okay. In this 23,400 units of material, what will be my scrap? What will be my rejects first? Into 25% will be my rejects. So 23,400 into 25% will be my rejects. 5,850 units. In this 5,850 units, 1/3 can be reworked again into 1 divided by 3. 19,050 units can be, 1950 units can be reworked. Okay, which means the balance which is there is nothing but the scrap. 5850 minus 1950. Scrap is 3,900 units are scrap. Now, this 3,900 units I can sell for 5 per unit. This is my scrap value. Not units, 19,500. So if I am doing the manufacturing of products X 19,500 units, my scrap will be to the amount of 19,500. So what is my standard scrap? 19,500. What is my actual scrap value? 22,500. So 22,500 minus 19,500 is 3,000. 3,000 favorable is my scrap variance. I hope it is clear. I hope this question is clear to you. Okay. Now, we are moving on to the next question, which is question number 38. This has been tested in June 2017 attempt. Okay. Now, what is this question? During the energy audit of Reliable Engineering Limited, the following figures relating to the usage of power were placed before the auditor. Okay. Now, what information is given to us? They have given us 3 years of information. 2021, 21, 22, 22, 23. Okay, 3 years information is given to us. Now, they have given us total power consumed in kWh, which means unit is given. Rate per kWh is given to us. So, this is rate, this is units. And total production in million kgs is given to us. So, these two is given in different units of measurement, that is kWh, and this is given in kgs. Okay. Now, compute the necessary productivity measure, price variance, volume variance of power usage. They are asking us to calculate price variance and volume variance. Okay. Now, first, we need to do the analysis for the given question. Now, total power consumed is there, rate per kWh is there, which means we will be able to determine total power cost. Yes or no? This is the power consumed units. This is rate per kWh. So, I will be able to determine the total power cost with the given question. 2642,720 into 6.29. So, this will be my total power cost. 1,66,000. No. Yeah. 1 crore 66,22,708. 708.8. Here is 709. I have did the round figure. Okay. So, total power cost. Similarly, you will do for the next years also. This into this, this into this. You will get the total power cost. Okay. Now, total power cost is there. And in the question, they have given us total production in kgs, which means units in kgs is given to us. Yes or no? So if I am dividing the power cost divided by kg, I will get the power cost per kg. Power cost per kg. How many kgs it is there? It is million kgs is given. 422.16. So here in material, it will be all complicated to bring million into thousands and all. If you don't want, don't follow it. Okay. What you can do, you can follow the same which is given 422.16. Put it in million kgs itself. Okay. What is total power cost? 1 crore 66 lakh 22,709 divided by 422.16. You will get the answer to be 39,375.37. Okay, you can put it as 37 or just put it 39,375 as the round figure. Similarly, you will do here also, it will be 35,725. Here 31,182. Put it here like this itself. Here you will put not 1000 kgs, but you will put million kgs. In million kgs, not in 1000 kgs. Okay, now. What is price variance? Price variance is nothing but, now what is the price which is given in the question? This is also units. This is also units. Only this is given in rupees. So the rate is the price. Change in price divided by change in price into change in price into quantity. Now what is the quantity? Now rate per kWh, and we will consider kWh. This into 6.29 minus 5.42. You will get for 22-23. And for 21-22, this into 5.42 minus 4.90. So, change in price into quantity. Okay, change in price into quantity. You will take that and you will get the price variance. Now, for volume variance, you have to take it to be the volume. So, this is the volume which is given in million kgs. So, this will be the volume, and if you are differentiating between the volumes, you have to multiply it with the rate. Now, what rate you will take? Whatever the rate which you have calculated as power cost. Okay. Now, here 422.16 minus 416.36 into, you can write it same thing, 39,375. You will get 2,28,375. I hope it is clear. Similarly, here also 416.36 minus 376.08 into 35,725. You will get 14,39,003. I hope it is clear. If you are getting confused with this, don't follow this, just do this. Okay. I hope this question is clear to you. So, this is how you will do the price variance and volume variance. I hope these questions are clear. Now, moving on to the question number 39. This has been tested in December 2017 attempt. Okay. The following is a summary of profit and loss account. So, so far we have, whatever we have seen as two questions, that is from CS 21, quality control cost. We have done the variance analysis. Okay. We have done the problems of variance. Now, these last two questions of 39 and 40 are about abnormal cost calculations. Okay, abnormal cost calculation problems. So we will see 39 and 40. Okay, now the following is a summary of profit and loss account of Miss Strawberry Company Limited for the year ended 31st March 2017. Okay, now they have given us the information about all these things. Okay, we'll see that. Now, what is the information which is given in the question? There was a major breakdown of machinery resulting in loss of production for 42 days. And that 42 days loss of production is from June and July. Okay, in 2016. Okay. And there was a labor strike of 97 days from 14th of February to 21st of May. Okay. The company produced a single product which is called a steel billet. And the production during the year is 9,42,000 kgs. Okay. You are required to compute the amount of abnormal cost on the account of breakdown and strike. So there is a breakdown and there is a strike due to which the production has stopped. Due to the production stoppage, what is the abnormal cost which has to be incurred by this particular company? That we have to do the calculation. Okay. Now, first, how many total days are into abnormal? We are going to calculate. Now, here they have already mentioned 42 days in June and July of 2016. Okay. So, the period which we are calculating is 2016 and 2017. Yes. Now, what is the period in between? April 1st of 2016 to March 31st of 2017. Yes. So in 2016, June and July, 42 days were breakdown. But what are the strike days which are given? 14th of February to 25th of May. But our year is closing at March 31st, which means 14th of February to March 31st. How many days are there? Only those days we will consider for calculation of strike. Okay. Up to 31st March, from 14th of February, there are 46 days. How many days? 46 days. So, total how many days the stoppage has been done? 42 plus 46. Total 88 days there is a stoppage. Which means the production hasn't happened properly. 88 days. Okay. Now, I hope this is clear so far. Okay. Now, coming to here. Sales, cost of sales is given, excise duty, salaries and wages, power and fuel, major breakdown, all these are given. Now, if you remember, when we were doing CAS2, capacity determination, in CAS2 also we have derived abnormal cost. Now, abnormal cost we have derived from fixed cost, yes or no? So here in this case also, we are going to bifurcate the cost into variable cost and fixed cost, and we are going to calculate the abnormal portion from the fixed cost. I hope it is clear to you. Now, first, income. What is the income which is there? Income is nothing but the sales. 13,540 lakhs. Put it rupees in lakhs, amount rupees in lakhs. Income 13,540. In this, less variable expenses. Now, what are the variable cost? Raw material, stores and spares. 5,600 is the variable cost. 5,600. Next, excise duty 830. Excise duty 830. Salaries and wages is not variable, it is fixed. Next, power and fuel. Power and fuel is variable cost. So here this is variable cost, this is variable cost, and this is variable cost. So you will take all the three and you will do the total of variable cost. This is our total of variable cost. Now sales minus contribution is your margin. Sales minus variable cost is your margin. Margin is not required, but they have calculated as it is a statement. Okay. Next, fixed cost. What is fixed cost? Total cost minus variable cost is fixed cost. Now how to get the total cost? Already mentioned in the question as total cost of 13,146. 13,146 minus variable cost 6,900. You will get the fixed cost to be 6,246. Now, whatever the total cost, fixed cost of 6,246 is there, this 6,246 we are going to bifurcate into abnormal and normal. Okay. And from this abnormal and normal, we will be able to determine what is our abnormal cost. I hope it is clear to you. This is how we are going to calculate it. Okay. Now, in this fixed cost, what all are there? Salaries and wages, major breakdown, regular maintenance, selling and distribution, insurance, rent, sales, taxes, all these are there. Now, if we come to the first, salaries and wages. Now, what is abnormal period and due to which the abnormal period is there? In this abnormal period, 42 days are for breakdown, which means breakdown of machinery. If machinery is not working, employees will come to the office. Employees need to be paid. So, in this 42 days, the payment is given to the employees as salaries and wages. But the next period of abnormal, which is there, 46 days. 46 days are because of the strike of labor. If labor strike is happening, will company give payment to them? No, because they are fighting against the company. Why company will give the payment? Company will not give the payment. So 46 days, company hasn't paid the salaries. So in entire 365 days, how many days the payment is not given to the employees? Only for 46 days. So for 390 days, the payment of salaries is being done. I hope it is clear to you. Okay. I hope it is clear to you. So salaries is clear. Salaries amounting to 1400 lakhs is for the period of 319 days. Not for 365 days and not for the entire 365 minus 88. 277 days. No. Other expenditures we have considered to be 277 and 365. But here it is not like that. Okay. Here it is for 319 days. I hope it is clear. Now, salaries and wages. 42 is to 390. So, for 42 days, the amount is paid. But that is for a normal period. Breakdown. So, 42 is to 319. You have to do the calculation and you will get the answer. In this 1400, for 42 days, it is 184. So 1400 into 42 divided by 319, it is 184. So whatever the balance is there, balance is normal cost. 1400 minus 184 is, 1400 minus 184 is 1216. That is your normal cost. I hope it is clear. So this is the abnormal and normal. So this is abnormal and normal classification of salaries and wages. I hope it is clear. Now next, major breakdown. Now, here there is a breakdown of machinery. Is this normal? No, it is abnormal. So whatever breakdown repairs are done, everything is abnormal. Nothing is normal in that. Okay. Whatever the breakdown repairs are given, everything is abnormal. Next, regular maintenance. Regular maintenance, you can consider it and you can bifurcate between 88 and 365 days. Okay. Now, see, this regular maintenance, selling and distribution, interest and selling and distribution cost. Now, here interest and selling and distribution cost, these two we will not bifurcate between normal and abnormal. Okay. Now, normal and abnormal, no bifurcation. Why no bifurcation? Now, what is selling and distribution cost? This will not come into the production. It is after production, whatever incurring is there. Now, in the production, we'll consider what all the costs we made to be normal and abnormal cost. But this is after the production, no? So, this will not be classified into normal and abnormal, but it will be there in the fixed cost. Similarly, interest also. Interest also will not bifurcate into normal and abnormal. It will be taken into fixed cost. Okay. So, you will write interest as only cost, no normal and abnormal, and selling and distribution also only cost, no normal and abnormal. I hope it is clear. Other than that, whatever the thing is there, like, regular maintenance, insurance, rates and taxes, printing and stationery, traveling, other administrative expenses, depreciation. All this cost, you will do the addition, which will turn out to be 2277. This 2277 is not deducted in any of the cases. Even in the 88 days it is paid, for entire 365 days also it is paid. Now, in the payment of entire 365 days, what is the abnormal period? 88 days. 2277 into 88 divided by 365, you will get 548.9, which is nothing but 549. So, this is your abnormal cost. 2277 minus 549, you will get the normal cost to be 1078. So, this is how you will calculate. Now, what is the total abnormal cost? 768. What is total normal cost? This. What is the total cost? 6246, which is our fixed cost. I hope it is clear to you. So, this is how you will calculate the abnormal cost. Now, this is not from this table, but this is actually a separate table. Don't get confused. How we are calculating the Abnormal cost 768 lakhs divided by the production 9 lakh 42,000 kgs. Okay. Abnormal cost per unit. Now what is fixed cost? Only we are considering normal fixed cost. Abnormal cost we have considered separately. So what is normal fixed cost per unit? This much. Now what is variable fixed cost? Variable is 6,900. Sorry, variable cost. Variable fixed cost. Variable cost 6,900 divided by 9,42,000 kgs. So this is separate. What is per unit cost of fixed normal, fixed abnormal and variable cost? I hope it is clear to you. So these are the questions. Now question number 40, this is also same. 291 in which 6 days and 4 days are abnormal. So you'll take 291 plus 6 plus 4. Total working days are there. And abnormal days are 6 plus 4, which is 10. Okay. In this, salaries and wages are paid. They have bifurcated and given itself salaries and wages. Layoff period, it is 65, which means abnormal is 65, normal is total fixed cost is 3,360 and other fixed cost 1,050. 1,050 if it is for 301, what is for 10? 10 divided by 301. This is the total cost. This is a simple question. Can be tested in MCQs. Okay. So this is regarding the abnormal cost calculation. I hope everything is clear to you. So we have completed overview of cost accounting standards and GESA. So whatever we have seen, entire Pinnacle book questions also we have covered, and I have also covered the board material questions also. So these are more than enough for your examination if you are preparing it conceptually. Okay. Don't by heart it, prepare why we are doing it and for what purpose we are doing it. If you have any doubts in any of the question, you can ask me in the Telegram channel or you can ask me in the below comments. Okay. Whenever you are going with that particular question, after listening to that question, pause the video, work it out and then move to the next question. So that with the video itself, you will be able to complete the revision. I hope whatever we have discussed as questions of board material, companies cost records and audit rules, and overview of cost accounting standards and GESAP is there, everything is clear to you. Okay. Next, we are moving on to the next, which is management reporting issues and analysis. So we are going to see the practicals of management reporting issues and analysis. So if you see the past attempt question papers of new syllabus and the recent MQP of June 2025 attempt, the questions from management reporting issues and analysis are asking in last 5 MCQs. The question is given in last 5 MCQs. So in this video also, I'm only going to take it as if it is asking for an MCQ. Okay. So we will move to the questions. Question number 1. Now what they have asked is about. Topple company has the following forecast figures for its first year of trading. Now what is given? Sales is given to be 36 lakhs. Purchases are given to be 30 lakhs. Average receivables are 3 lakh 6,000. Average inventory is 4 lakh 95,000. Average payables is given to be 2 lakh 30,000. Average overdraft is given to 5 lakhs. And gross profit margin is given to be 25%. So this is Topple company's year of trading information. And industry average data is given to us. What is industry average data? Inventory days is 53, receivable days 23, payable days 47, current ratio 1.43. Okay. Assume there are 365 days in a year. Required. What we have to calculate? We have to calculate the cash operating cycle. Now, what does it mean by cash operating cycle? How much the time it takes for the company to pay to its suppliers and receive from us its whatever credit sales happen. From that, how much time they are receiving it and how much time they are taking it to pay to the suppliers. The period in between is called as cash operating cycle. So how to get the cash operating cycle? Inventory days plus receivable days minus payable days. Inventory days plus receivable days minus payable days is the calculation for cash operating cycle. Now, how we are going to calculate the inventory days? Don't take the inventory days which is given as industry average data. You should not consider that many students will do the mistake as it is already given in the question, that will be the days. No. This is given to be industry average data. We have to calculate the cash operating cycle and all for topple company. Okay. Now, what is inventory days? How much the inventory is given to us? 4,95,000. So 4,95,000 divided by cost of goods sold. Inventory days is nothing but average inventory divided by cost of goods sold into 365 days. This is the formula for inventory days calculation. Now, what is average inventory, which is already given in the question? 4,95,000. Now, how do we able to calculate cost of goods sold? In question, they have mentioned as sales and they have given GP margin. So, sales into 1 minus GP margin will be our cost of goods sold. So, what is sales? 36 lakhs. 36 lakhs into 1 minus 0.25 is 0.75. So, what will be our cost of goods sold? 27 lakhs. 27 lakhs. So, 4,95,000 divided by 27 lakhs into 365 will be our inventory days, which is 67 days. I hope it is clear. Next, receivable days. Receivable days means, which means we are selling and we are receiving the amount. Average receivables are 3,06,000. And this is for what? Sales. So 3,06,000 divided by 36 lakhs into 365. Receivable days. Next, payable days. Average payables divided by purchases into 365. 2,30,000 divided by 30 lakhs into 365. So we have got average days, receivable days, payable days. Average days, which is 67 plus receivable days 31 minus payable days 28. The cash operating cycle is 70 days. I hope it is clear. Next, they have asked us for current ratio. So how do we get the current ratio? Current assets minus current liabilities. Now, in the given question, what are current assets? Average receivables, current asset. Average inventory, current assets. What are current liabilities? Average payables, average overdraft. So average receivables plus average inventory divided by current average payables plus average overdraft. Current assets divided by current liabilities. You will get 0.10 times as current ratio. Then quick ratio. What is quick ratio? Quick assets divided by current liabilities. What are quick assets? Quickly we have to convert it. Average receivables. Average inventory, we can't convert it quickly. So average receivables will be our quick assets. So average receivables divided by current liability, which means average payable plus average overdraft. We'll get the quick ratio to be 0.42 times. I hope it is clear. Now, next is sales to working capital ratio, which means sales divided by average working capital. Now, what is sales given in the question? 36 lakhs. Now, what is working capital? In a working capital, we will only consider to be average receivables, average inventory and average payables. Now, why average overdraft is not considered? In costing, overdraft will not be considered as working capital. Okay? Overdraft is not considered as working capital. So, this will not be included in the working capital calculation. So, how we are going to get the working capital? Average receivables plus average inventory minus average payables. Sales divided by working capital, we will get the ratio of 6.3 times. Just you need to know the concept. You need to know the definition, what to do it. If you know that, then this problem is very much easy. So, if this is being tested as MCQs, you will just do the calculator and write it down. Anyway, it is bubbling system only, so it will be easy for you. Okay, I hope this question is clear. Now, moving on to next question, question number 2. ABC company has planned for an investment of 800 lakhs with a 50% loan from bank. So, in this 800 lakhs, 50% is loan, which means 400 lakhs is loan and 400 lakhs is equity. Clear so far? Now, from bank at 10% interest. This loan is for 10% interest. Okay. And direct cost for the year is given to be 480 lakhs and 50% of which is material cost. In direct cost 480 lakhs, 50% is material cost. So material cost is 240 lakhs. I hope it is clear. Now other expenses are given to be 80. Other expenses are 80 lakhs. Okay. The goods will be sold at 150% of direct cost. Now what is sales? 150% of direct cost, which means 480 into 150%. 720 lakhs. 720 lakhs will be my sales. I hope everything is clear. We have done the analysis. Now, what we have to calculate? Now, what we have to do the calculation. We'll see the calculation now. Net profit margin. Now, we need to get the net profit margin, return on assets, asset turnover, return on owner's equity and inventory turnover. Okay. Now, how do we get the net profit margin? We need to get net profit margin. Now, what is the formula for net profit margin? Net profit divided by sales into 100 is net profit margin. Not net profit divided by sales into 100. Net profit margin. So, for that we need to derive what is our net profit. How to get net profit? Sales minus cost. Sales is given 720 less cost 480. You'll get the gross profit 240. From this gross profit, you also have the expenses. What are the expenses? Other expenses 80 lakhs and 10% interest. Interest is also an expenditure. 400 into 10%, you'll get 40 lakhs. So 40 plus 80, 120. 120 lakhs are additional expenditure. Profit before tax is 120. Now what is tax rate which is given? 50%. What is profit after tax? 60. So net profit after tax 60 divided by sales 720 into 100. Net profit margin. I hope it is clear. Next, return on assets. Assets divided by return on assets. Sorry, net profit after tax divided by total assets into 100. Now what is net profit after tax? 60 lakhs divided by what are total assets? Only one asset is given, investment. Total investment is 800 lakhs. 60 divided by 80 into 100, 7.5%. Now next is return on equity. How do we get return on equity? Profit after tax divided by equity into 100. What is profit after tax? 60. What is equity? In 800 lakhs, 400 is loan. 400 is equity, 400. So 60 divided by 400 into 100, 15%. Return on equity. Next, asset turnover. Turnover is nothing but comparison with sales. Sales divided by total assets. What is sales? 720. What is total asset? Total investment 800 lakhs. 720 divided by 800. No percentage. Asset turnover. Always the turnover will be given in ratios. 0.9. Okay. Now here, inventory turnover. Usually inventory turnover should also be given in the ratio, but as per ICMAI, it is given in the percentage. So even in the options, if it is given as percentage, you have to write it as percentage only. Okay. Now how this percentage is done? Now whatever material cost is there, that is considered to be the inventory. Material cost divided by sales into 100. 33.33%. I hope it is clear. If it is not there, 240 divided by 720, do it. 0.33 times will come. 0.33 times will be your inventory turnover. I hope it is clear. So these are all already you have done a number of times in your CMA Inter. So that is only there. These problems only will be tested in the examination. Okay. Now, question number 3. This is a board material question and also a December 2024 attempt question. This is also simple question. Gross profit percentage is given to us for XYZ Limited. Gross profit percentage for 2 years is given 25% and 20%. Average stock is given. Stock turnover times is given. Income tax rate percentage is given. And post-tax income as percentage of sales is given to us. Okay. Now, they have asked us to calculate the cost of goods sold for the 2 years ending. How will we do? Sales into 1 minus GB profit. We'll get the cost of goods sold. Yes or no? Now, to derive that, we need to have sales. Did they give us sales here? No, but here they have given us stock turnover ratio. Now, what is stock turnover? Cost of goods sold divided by average stock. Now, what is average stock is already given in the question. What is cost of goods sold? We'll find out. Stock turnover is also given in the question. Okay. So, stock turnover, cost of goods sold divided by average inventory. So, cost of goods sold, if you're putting it as X, what is stock turnover? 20 times. 20 times equal to X divided by 40,000. If you do the cross multiplication, 40,000 into 20, 8 lakhs. Similarly, here also, 25 into X divided by 50,000. Cross multiplication, 50,000 into 25. 12 lakh 50,000. I hope it is clear. Next, sales for 2 years ending. Now, how to derive the sales? We know cost of goods sold. We know gross profit margin. Gross profit margin is nothing but sales minus cost of goods sold. So, you will do that. So, you will get the sales to be 10,66,667. How much is the gross profit margin? 25%. So, whatever the gross profit margin is there, cost of goods sold. Now, how much is the cost of goods sold? 8 lakhs. 8 lakhs divided by 0.75. 8 lakhs divided by 0.75. You will get the amount of sales. Similarly, here also 12 lakh 50,000 divided by how much the gross profit margin here 20. So 80, 0.80. You'll get 15 lakh 62,500. Everything can be easily done in the calculator itself if it is asking as MCQ. Next is net income after tax. Here income tax rate is given. Post-tax income of sales is also given. So net income after tax. Now what is post-tax income as percentage of sales, which means net profit after tax divided by sales into 100. If we do this, then our answer will be 9%. Okay, 9% equal to net profit after tax divided by sales into 100. So if we see, they are asking net income after tax, which is net profit after tax, which means sales into 9%. Do the cross multiplication, that's it. I hope it is clear. Next, profit before tax. This is net profit after tax. If we take the tax from that, we will get net profit before tax. Do the reverse calculation. 96,000 divided by 0.70. You'll get profit before tax. I hope it is clear. Next, change in profit before tax. What is the reason of increase or decrease? So you will do profit before tax. In 24, the profit before tax is 1,37,000. In 2023, it is 2,23,000, which means there is a decrease in profit before tax. So the profit before tax has decreased. The decline could be drop in sales and lower post-tax income as percentage of sales. So as sales has reduced, the profit also reduced. For that, management should analyze factors causing reduced profitability and take corrective actions. So they have to work on it and take the corrective actions. So this is your suggestion. I hope it is clear. So if 7 marks question is given, you have to write it like this. If just MCQ is given, you need not write all this. You can just bubble it up by doing it in calculator. I hope it is clear. Now next, question number 4. This is bacha, just chota bacha ka samay. Okay. What is variable cost? What is variable cost? Raw materials, utilities and packing materials are variable cost. Okay. What is variable cost? 50,000 plus 15,000 plus 5,000. How much it is? 70,000. 70,000 is the variable cost. Now after that, fixed cost. In this total cost, if I am eliminating variable cost, whatever it is there, it is fixed cost. 5 plus 4 plus 3 plus 5 plus 1 plus 2. 20,000. All these are 20,000. This is my fixed cost. I hope it is clear. Next, what is contribution? What is sales? 1 lakh. From this 1 lakh, if I eliminate variable cost, 70,000, that will be my contribution. 30,000. What is profitability? Profit. Sales minus cost. What is sales? 1 lakh. What is total cost? 90,000. 10,000 will be my profit. Raw material cost as a percentage of total cost. What is raw material cost? 50,000. What is total cost? 90,000. 50,000 divided by 90,000 into 100. 55.55%. Simple, clear. So these are the MCQs which can be tested from management reporting issues and analysis. I hope it is clear. So yes, we have completed the problematic part of management reporting issues and analysis, and also we have done for overview of cost accounting standards and GASAP and companies cost records and audit rules 2014. Now, if we see this workbook which is given by ICMAI for Unit 3 management reporting issues and analysis, this is about job work charges and all which is given, and here this is your costing sum. In your costing, you usually do it for 50% capacity and for 75% capacity, which already you have done a number of times in your standard cost management, strategic cost management paper. So that question is only given here also. And this is also about the cost of raw material, how to derive it. And here it is about break-even point. So break-even point you can see in your SCM subject. And next, the other question is also related to, see here, PV ratio, break-even point, contribution, profit at actual sales. All these questions are given. So these are not that much important for the examination. But if you want, you can see that once. But I will tell that no need. Just rely on these 4 questions as per the recent MQP. Only this might have a chance of tested in the MCQs. So even if practical question is asked, you can rely on whatever the first 2 questions we have told. Companies cost records and audit rules 2014 and overview of CAs and GASAP. These questions are there, and this is what our material is given to us. So these questions are more than enough for the preparation of upcoming June 2025 examination. So as I have told you, SMART 25 practical questions are completed, and I guess I have given you the enough clarity of the questions, the explanation, the provision, and how you have to present it in the examination. So questions are very easy, but presentation is important. But when you are going through these questions itself, do practice along with me. Pause the video after listening to the class. Pause the video, do that question so that easily you will have that remembrance. That's it. All the very best for the examination. If you have any doubts at any point of time, join the Telegram channel. I have told many times in this particular video, because exams are very round the corner and I know how much stress you all will have, and you will need that clarity to write it in the examination without the fear. Okay, so I'll be there till the examination. So ask any kind of doubts if you have in the Telegram channel or in the comment section. If as early as possible, the doubts will be clarified to you. Okay, all the very best. There are many upcoming videos which are yet to come on the YouTube. I'm going to come with MCQs video. I'm going to come with preparation strategy videos. Everything will be made available to you. So free sources which are already available in the YouTube for cost and management audit are Part 1 Marathon, Part 2 Marathon, Super 50 questions, which is Super 50 revision booster sessions, and also SMART 25 practical short questions along with ICMAI workbook. So I guess I have given you the enough clarity of entire subject of cost and management audit. We'll see you guys with yet another video. Till then, happy studying. Keep learning. All the very best. Don't lose the confidence. We BCCA and me, CMA Parvathi, are always with you. Okay? Thank you. Bye.